And the idea that, it's not quite as simple as just saying, oh, we can open businesses and get them back up and running, and that's going to make people feel more confident about the economy, because we don't know what the public health implications are going to be, and that always could backfire, just from a political standpoint, let alone from the standpoint of people who, are going to be ill, potentially because of that.
We also heard a lot more ratcheting up of the rhetoric against China and, pointing the finger at China as the source of the coronavirus outbreak. What more did he have to say there?
Yeah, I think that's a really interesting aspect and one that we should expect to continue going forward. We've really heard in the last week the administration all around really kind of ratcheting up the rhetoric when it comes to China. And I think that, Trump did talk about it. Also in terms of the trade relationship that the U.S. has with China, both patting himself on the back for the first phase trade deal that he helped negotiate prior to all of this virus, prior to the virus outbreak. And then also, talking about how he planned to continue to take a tough line on China. And so I think that he's going back essentially to his 2016 playbook when he talks about China, because that's an issue that really resonates with his base, and looking to paint himself as someone that's taking a hard line against Beijing, I think he views as potentially, somewhat at least being an antidote to some of the problems that are created for his reelection campaign by the economic downturn that's, happened over the last several weeks. And so I would expect him to continue to press that type of a line of argument going forward.
All right, and we'll continue watching. As always, Kate, thank you so much. That's Bloomberg U.S. Politics Editor Kathleen Hunter. Karen.
All right, Nathan, thank you. At 6:54 on Wall Street, it's time for the Bloomberg Small Business Report with John Tucker. John, good morning again.
Good morning, Karen. Walter's Hot Dogs in Westchester, New York has been around for more than 100 years. Well, like everybody else, they saw a sharp downturn in business with the COVID-19 outbreak. Chris Warrington is owner and operator of the Walters in Mamaroneck. Her grandfather opened up the hot dog stand after returning from World War I. Chris, can you tell us how the business has been impacted?
It's always been, you walk up to the counter, it's a roadside stand, you get your product, and you go and enjoy it. Well, now it's only pickup or delivery. Our mobile catering trucks, which are usually booked a year in advance for, major things, weddings, bar mitzvahs, graduation parties, country club openings, corporate events, everything since March has been canceled. So what we did was we decided to use our catering trucks to bring food to frontliners, which we've been doing since it started. We went into New Rochelle, which was considered the New York State hotspot, and brought lunch to the military and the frontliners. At least we've been able to keep all of our staff employed, which to us, that's like the greatest thing we could be doing right now, because we don't want to lay people off. But another positive thing that came out of this was we had started a online shipping company through Goldbelly.
Goldbelly's out in San Francisco, right?
They're the ones that place the orders through. And we started retail shipping our products because over the years, we're in business 101 years. We constantly got requests for, can you ship this product? We need Walter's hot dogs. I need a Walter's fix, So last year we decided to start shipping. And now with this pandemic, people all over have really been ordering and supporting our business, and it brings back memories for so many people.
Now, how do you ship a hot dog fresh across the country?
We freeze them and we ship them in ice packs along with our mustard, which is also a product that we make exclusively with our own recipe. And the other thing is we were in several of the retail grocers here in New York, and we've recently expanded into more because people just kept going on our Instagram page and saying, can you put your product in my market? Can you come here? Can you come here? So we're expanding the retail line in local grocers also here in New York. So we're actually, because of that, we're in a position now where we could actually hire a few more people just to help us get the orders out and stuff.
Maybe higher. Thanks, Chris. Chris Warrington owns Walter's Hot Dog Stand in Westchester, New York. And we're going to continue bringing you stories of small businesses working to stay afloat during the coronavirus outbreak every day at this time right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Small Business Report for today. Karen.
I love that idea, John, when we can have parties again to rent a Walter's hot dog truck to come and feed all your guests. It's a great idea.
I'm salivating at the prospect.
Right? I feel like I need to order some now. The idea sounds good. All right. John Tucker, thank you very much. Futures this morning are lower. S&P futures down 27 points. Dow futures down 280. NASDAQ futures down 74. 10-year Treasury up 430 seconds. The yield 0.59%. The yield on the 2-year 0.18%. And Bloomberg surveillance is straight ahead with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. For Nathan Hager, I'm Karen Moscow, and this is Bloomberg.
Influential conversations from Bloomberg.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £63 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 21st of May to play in the June draws. PPL manage lotteries on behalf of good causes. 16+. Conditions apply. Play responsibly.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
While most of us are looking out for each other at this time, sadly, fraudsters are trying to take advantage of the situation. Here's Chris Ainsley from Santander with advice for keeping your money safe.
If you're buying anything online, take care and don't pay by money transfer. Always pay by card. Take time to check the seller is genuine, and if you're unsure, then stop and don't send any money.
For more advice on keeping your money safe, visit santander.co.uk.
Call given the data.
Which segments of Alphabet's business are most likely to come under scrutiny?
Get all the pieces.
They're getting mixed signals from governments.
He's failed to gain traction.
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
In this cycle, we've dealt with a lot of shocks.
It's important to understand what the Fed can and cannot do.
Finance.
There's no asymmetry left in markets. It truly is a zero-sum game.
We will get slower growth. I mean, let's not get confused about that.
Investment.
Very few investors want to own any energy to begin with.
There's a great deal of uncertainty. People are trying to hide in safe places.
Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz on Bloomberg Radio.
From New York City, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance. Coming up on the program, President Trump doubling down on criticism of China, the long process of reopening economies slowly beginning, and Warren Buffett dumping airline stocks, wishing them well. From the Bloomberg Interactive Brokers Studio, hello Monday, here is your Monday morning price action. Following a week of losses on the S&P 500, we add to them this morning. Negative 0.9% on the S&P 500. Risk aversion bleeding through asset classes worldwide. Yields coming in just a basis point on a 10-year. We'll talk about that a little bit later. 0.6% is your yield on a US 10-year. In foreign exchange, the dollar showing a little bit of strength against the bulk of G10. Euro dollar coming down 0.4%. And the crude plunge resumes. Crude down by 5, call it 6%. On WTI to $18.63. From New York City, for our audience worldwide, you are listening to Bloomberg Surveillance live on Bloomberg Radio. Alongside Tom Keene, I'm Jonathan Farrow, together with Lisa Abramowitz. The big issue of the morning, the president and the administration doubling down, Tom, on criticism of China.
Yeah, they will. We'll talk about that all across surveillance today. We've already had some good conversations this morning, John, on that. I love what you said there, John, about bleeding through. That's the feeling of the tape this morning. It's a little bit of a nuance without getting too angsted up about the gloom. But the 2-year, to go to our good guest that's going to be coming in with us in a bit, I find the differential, John, of 2-year dynamics in America and Europe to be absolutely fascinating. In the United States, it's measured. It's in control. It's a central central bank on top of things. And the German 2-year yield, big negative, getting ever more negative, has an acceleration to it that's totally different than what we see in the U.S.
Both, of course, though, anchored by central banks going nowhere anytime soon. Lisa, another observation about the Treasury market just a bit further out on the curve is what's happening with the 10-year. On days where equities are lower, much lower, 10-year yields really aren't moving a lot at all. We're deeply negative on equity futures, and 10-year Treasury yields come in just a single basis point.
Yeah, honestly, it's just been an amazing flat line when it comes to yields in the U.S. And you have to talk about yield curve control by the U.S. government, but also the expected record amount of issuance expected to be announced on Wednesday when they announce the quarterly funding and when they announce the probable issuance of 20-year treasuries for the first time since the 1980s. It just speaks to this tension in the U.S. Treasury market with an unprecedented amount of U.S. Treasury sales at a time when there's a big risk aversion in the markets. How much lower can yields go?
Looking ahead to several key events, including that event on Wednesday. Payrolls Friday just around the corner as well. Fantastic lineup of guests for you through the week and this morning as well. And we begin this morning's program with Matt Hornback of Morgan Stanley. We're lucky to have access to several great rate strategists on the street. Matt, I'm pleased to say, is one of them. Matt, fantastic to have you with us on the program. Let's just start with the price action right in front of our faces right now. Equities lower again and a bond market that's really not doing a whole lot. Why so, Matt?
Hey, John. Thanks for having me on. So, look, this goes back to an issue that we actually talked about a couple weeks back, which is the idea that bond markets are caught between a fiscal rock and a QE hard place, right? We're basically talking about this interplay between all of the issuance coming to market and all of the issuance that's ultimately going to be bought in the secondary by the Federal Reserve. Now what we're seeing recently is the Fed peeling back on the pace at which it is buying treasuries. That's probably one of the reasons why on a day like today, where the S&P is down about a percentage point, you're only getting a basis point rally in the treasury market. Investors are very worried about the supply.
Matt, if you look at the 2-year yield in the U.S., it's linear and certainly log linear, and it's just grinding ever lower yield. Do you extrapolate that out to an ever lower and lower and lower yield? Or can the Fed actually control that glide path?
At the end of the day, the Fed has a modicum of control over the markets during certain periods of time, and then there are other periods of time. Remember the taper tantrum in 2013, where it completely loses control of the market based on a handful of words coming out of somebody's mouth, and so it's a very delicate balance. I'd say at this point, what the Fed is trying to figure out is what kind of forward guidance can get them to allow yields to remain low, and yet when the time is right, allow those yields to start to gradually rise. It's a very tough balance. This is not an easy thing to accomplish.
Matt, what would yields be if the U.S. were not selling record amounts of debt right now? Hello.
I think, I think they would probably be much lower. You could easily see the 10-year Treasury yield revisit the all-time low of 30 basis points. Again, the amount of securities that the Fed is removing from the market is unprecedented. And when we talk about the supply-demand balance between what the Treasury will issue and what the Fed is buying, we also have to put that into the context of coupon bonds, right? We know that there has been a tremendous amount of Treasury bills that have been issued this year. We also know that towards the end of last year, the Fed was buying a lot of Treasury bills. Now the Fed is buying a lot of Treasury coupon bearing bonds. And if the U.S. government wasn't going to issue any of those coupon bonds, almost certainly the 10-year yield would be closer to 0 than 1.
Matt, you've got a macro mandate for Morgan Stanley right now. Let's macro over to Ellen Zentner. Combine her inflation view with your view of fixed income as the indicator of choice. For our listeners, are they ever going to garner a constructive real yield? I don't mean a positive real yield. I mean one that they can actually bank.
Well, I mean, this has been a phenomenon the world over, and the answer probably for the next 5 years is no. Real yield is a scarce asset these days. especially when the Fed is removing so many of those securities that would otherwise offer you a positive real yield. I think you would need to see, in order for me to be wrong on that, you would need to see the government expand the deficit in a continuous way. I'm not talking about 1 year of higher deficits or 2 years of higher deficits. I'm talking about year after year after year of continuously expanding deficits. This is about a rate of change, not just a nominal number every year. We need to see that happen in order for real yields to really start going considerably higher.
Let's talk about the recovery as well, Matt. A little bit later this morning, I'll be catching up with your colleague, Chet Anaya, the chief economist at Morgan Stanley. There is a focus on consumption. And Matt, as I look at the sequencing of the reopening across Europe in a place like Italy, it's manufacturing first, and then at the back end, it'll be the consumer-facing sectors of the economy that open last. And you guys are pointing out that consumption will be the laggard here, the slowest to recover. Now, with that in mind, how hopeful can you be about a short, sharp recovery if consumer-facing sectors of the economy are last to open and consumption will be the laggard here?
Well, I mean, particularly in the U.S., John, if that's the case, it's going to be a long slog because at the end of the day, the U.S. economy is mostly a consumer-based economy. And so if we experience the same type of dynamic that we're seeing play out in China, for example, then it is going to be a slow recovery. And that is what our economists are suggesting in their forecasts. We're not really getting back to any kind of consistent level of potential growth until 2022. And that is something that we're all going to have to deal with. Right? It's the U.S. economy is driven by consumption.
I'm struck by Warren Buffett and what he said this weekend. He was saying that he didn't get calls because, frankly, or the fact that he was getting calls were not actually at terms that were attractive to him based on what the Fed had done, based on the intervention that basically they had artificially propped up some of these companies and lowered borrowing costs. Do you think that investors who are investing alongside the Fed ultimately will be struck with insolvencies and losses, or do you think that they just won't get very big returns?
Well, I don't think they're going to get very big returns, Lisa. At the end of the day, the government the government and the Fed, in a sense, have a special ability that it's not sort of commonplace in the sense that they can go in and they can increase their debt load. Right, the government can increase its debt load, and the cost of that over time ultimately would be borne out through the currency. Right, and what we're seeing over recent months is that the currency hasn't had a problem with it. Now, that's not to say that it will never have a problem with it. And in fact, we do believe that the dollar is evolving through a topping process. And at the end of this year, the end of the next year, the dollar is going to be weaker, perhaps substantially weaker than it is today. But that's ultimately where you would see the pain, if you will, hitting the government and the government's balance sheet is through the currency, and we have not yet really seen that to any degree worth writing home about.
Matt, we've got to leave it there. Send my best to the team, won't you? Matt Hornback there of Morgan Stanley on the latest in the Treasury market and beyond. Let's get you the latest news, the headlines worldwide. We can check in with Bloomberg's Michael Barr. Good morning to you, Michael.
Good morning, John, Lisa, Tom. President Trump answered questions about COVID-19 and how his administration handled the pandemic during a Fox town hall event. He was asked by a woman who is jobless due to the coronavirus if the government is going to do more to help people financially.
It's not your fault. I mean, just remember that it's not your fault. And there is more help coming. There has to be. And we want to get it to a point when we open, we're not going to lose businesses. And therefore, more importantly, frankly, we're not going to lose the jobs that run the businesses.
President Trump also blames China for not stopping the spread of COVID-19. President Trump was joined at the Lincoln Memorial by Vice President Pence. Oklahomans were allowed to return to stores as stay-at-home orders expired in the state's biggest cities. Governor Kevin Stitt talked about his plans for reopening the state's economy amid the pandemic.
On May 1st, actually on Friday, we opened up
restaurants. We opened up gyms based on some social distancing, some sanitation, the condiments, the throwaway menus, that kind of stuff. Churches were open except for nurseries, but every other pew. So we gave a list of guidance, and then we'll watch the data. 14 days later, as long as everything remains flat, then we'll go to a phase 2 starting on May 15th.
Oklahoma's health department reported that the state has more than 3,700 confirmed COVID-19 cases. North Korean leader Kim Jong-un ended his almost 3-week absence from public events with a factory visit. Meanwhile, North Korean troops fired at their South Korean counterparts yesterday in the demilitarized zone. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts, more than 120 countries. I'm Michael Barr. This is Bloomberg. John.
Michael Barr, thank you, sir. Thank you very much. What a weekend we had for relations between China and the United States. The President of the United States doubling down on earlier criticism from Secretary Pompeo. The criticism of China and the Communist Party there, Tom, really escalating in the last week or so in a big way.
Yeah, absolutely. I mean, I think it's really ramped up. You know, the last couple of weeks, John, it's been China. Yeah, okay, China, but we got a lot of other issues in the U.S. This weekend, it was remarkably China front and center.
We'll turn our attention to that next on this program. Looking forward to doing that with you. As we look at the screen this morning, equity futures are negative. We are down 27 points on the S&P 500. Some mild losses last week. We add to them, though, we're down around about 1 full percentage point on the S&P. Looking ahead to the week ahead, Lisa mentioning the refunding announcement from the Treasury coming on Wednesday. Then on Friday, it's the big one. A very, very ugly payrolls report expected for the month of April. All still to come through the week right here on Bloomberg Surveillance Live on Bloomberg Radio.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically. Yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Influential conversations from...
Introducing the new single, Impossible. From Central American rock and blues trio, Steady Rolling. Their epic story of love and loss continues. Download and stream the single, Impossible, from the band Steady Rolling, wherever good music lives.
Prince of Darkness here. Let's rock and roll.
Blaze is taking British rock legend Ozzy Osbourne and his son Jack on a road trip of the USA.
What?
It's him and I, the open road, father and son, in an RV. Ready?
I'm ready. I feel like the king. It's what you call touring, son.
Ozzy and Jack's American road trip starts Tuesday the 5th of May at 9 on Blaze. Take it on. Freeview Channel 63.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
4 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are dropping along with stocks in most of the world. And another sign the risk-off move that hit markets at the start of this month may have further to run. Contracts on the three main U.S. equity indexes all falling, with Delta Airlines, American Airlines, and United Airlines among the biggest pre-market decliners. Warren Buffett said over the weekend Berkshire Hathaway sold out of the four top U.S. airlines, opining that the business has changed in a very major way. And we check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures down 26 points. Dow futures down 284. NASDAQ futures down 78. The DAX in Germany's down 3.5%. 10-year Treasury up 3/32. Yield 0.60%. Yield on the 2-year 0.18%. NYMEX crude oil is down 4.7% on 93 cents at $18.85 a barrel. COMEX gold is up 0.8% or $13.40 at $17.14.30 an ounce. The euro 1.0929 against the dollar. The British pound 1.2408, and the yen 106.86. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you very much. The administration then doubling down on its criticism of the Chinese Communist Party over the weekend. Secretary Pompeo, the first to weigh in, then the president picking up where Pompeo left off yesterday evening, raising concerns about what would happen next with tariffs. The president calling tariffs the ultimate punishment for his response to the pandemic, and Tom threatening to withdraw from the Phase 1 trade deal if Beijing's purchase pledges did come up short. This is just the latest criticism of China in a long list of them in just the last week.
And driven forward last night with the symbolism of the Lincoln Memorial. Of course, folks, built in 1922 out of the debris of World War I, the Daniel Chester French statue of Abraham Lincoln. And there was a president on the white marble speaking of China. Our Kevin Cirilli is our chief China correspondent. Kevin, it's heated up again. Is this about domestic politics, or is this really a reattachment of grievances between the two countries?
I think it's the latter. And look, I think from a broader perspective, if I'm being quite candid here, there is this nonpartisan national security policy that has existed as it relates to U.S.-China policy even well before COVID-19. And I think what we're watching in real time is a redrawing of how the United States is going to conduct foreign policy, not just with the U.S. and China from two nation standpoint, but from how they're going to interact with Europe as Europe relates with China as well.
There's been some stunning reporting coming out from various publications over the last week, including AP. Just take a listen to this. This is the lead paragraph in a story from the AP in the last couple of days. U.S. officials believe China covered up the extent of the coronavirus outbreak and how contagious the disease is to stock up on medical supplies needed to respond to it. Intelligence documents show. Where's all of this coming from, Kevin?
I mean, it's coming from the United States intelligence, and even beyond that, the AP is incredible reporting. But even beyond that, I would just point out to again this China and its ability or lack thereof to provide for the Europeans, and I think that's been something that's been dominating. I think you saw that in recent comments from German Chancellor Angela Merkel over the past couple of weeks, and President Trump in the Fox News town hall last night, in which he said essentially the tariffs are back on the table. So from a top-line view, this turbulent relationship is only going to increase. I spoke with a Biden World campaign aide on Friday who suggested to me that even from a Democratic national security standpoint, in Democratic national security circles and intelligence circles from the Obama administration, the skepticism of China exists tenfold. And we just haven't had a forum, a national forum or dialogue, i.e. a debate, where Biden can lay out that vision in plain speak.
And Kevin, that sort of partisan aspect of this goes to exactly the area that I wanted to touch on, which is facts versus spin. And a lot of people saying that the Trump administration is trying to distract away from their own failings and pitfalls, while other people are saying, no, U.S. and European scientists were not allowed into China, still have not been, to determine what actually happened. Can you decipher the facts versus the spin in response to some of these allegations that this really is a way just to deflect by the Trump administration?
Lisa, that's such an important question because, and I'll answer it in two parts. First and foremost, you're going to hear increasingly from Republicans a more tough talk against China, and not just from 1600 Pennsylvania Avenue, from Marco Rubio, from Lindsey Graham, and the likes on the Hawks on the Hill. But from the Democrats' perspective, you're going to hear criticism of China, but you're also going to hear Biden world make the case that America needs to restore its footing in the world from its global footing in the world and get respect, they'll say, from the Europeans. You saw this, mind you, when Obama was running in the next era against the Bush administration. And so I think it's going to be a similar argument. Democrats can do both. They can criticize the president and criticize China by saying that they want to have a better relationship with Europe, and that's what you're going to see.
Well, I think we can all do both. We can criticize the response of the West to this pandemic, but you can also pick out the problems in China. And you also have to acknowledge that the intelligence agencies on both sides of the Atlantic reportedly seem pretty well aligned on this single issue about China's role in all of this and the lack of transparency, Kevin.
1,000%. And even and it's interesting because as the president pre-COVID had been very incredibly critical as it relates to a trade front between the U.S. and Europe and on 5G. Let's not forget about 5G because 5G is I would argue was even more strenuous, more turbulent than what we saw on the trade front with 5G and how the Europeans were doing business with China on that. But I think as you look forward, I think that this was a dramatic wake-up call of epic proportions for Europe and the United States to reevaluate not only how they do business with each other, but how they do business with China. Yeah. And just we can't. I know I'm jumping all over the world, Tom, and I apologize, but you can't really forget about South America or Latin America because of how the Chinese have tried to penetrate that economically.
You just apologized to Tom. What about
I
the
always
rest of us?
apologize. And you know what? He took it. He took it, even though you had nothing to apologize for. He was still like, "Yes, thank you for apologizing to me. I needed that this morning."
Kevin, it's Monday. Later on, have a rolling rock.
Kevin, great to catch up with you. Kevin's already there.
Thank you as
down
always.
in Washington, D.C. Guys, we need to think about consequences, and one of the consequences will likely be supply chain repatriation. I think that's going to be a big focus, and not just on pharma, where I know they are laser focused right now, not just in the United States, but also across Europe too, Tom.
John, how do you fund this is Steve Roach 101. How do you fund the labor arbitrage of supply chain repatriation?
Well, this is about national security issues.
I don't disagree, but somebody's got to...
Look, we know where Stephen Roach 101 stands on the issue of China. Let's not talk about it.
I just wonder, John, how we pay for that supply chain repatriation.
Well, I think there's going to have to be some help, Tom. But on issues of pharmaceuticals, I think it's going to be pretty clear. The government's going to try and set the guardrails here on what can and can't be produced outside the United States. Much more still to come through the week. Maybe even Stephen Roach will come on the program in the next couple of weeks and give China's side of the story. I have no doubt that he will do just that. Equity futures down 26 points on the S&P 500. We're negative 0.9%. From New York this morning, good morning to you all. This is Bloomberg Surveillance Live on Bloomberg Radio.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
This is a Bloomberg Money.
Introducing the new single, Impossible. From Central American rock and blues trio, Steady Rolling. Their epic story of love and loss continues. Download and stream the single, Impossible, from the band Steady Rolling, wherever good music lives.
Switch on Acorn TV, the brand new streaming service featuring world-class TV from Britain and beyond. Watch exclusive premieres like the colourful crime drama Queens of Mystery.
Once you have eliminated the impossible, whatever remains, however improbable, must be the truth.
And fan favourites like Inspector George Gently.
I'm just an old copper doing his job.
If you love drama with a little mystery thrown in, enjoy 30 days free with code ACORN30. Then just $4.99 a month. No adverts, no contract, cancel anytime. Join online today at acorn.tv.
If you want to do something important, work in adult social care.
I'm Georgia. I love social care because you never know what each day will bring. The thing that I would say to anybody that was thinking about a job in social care is go for it.
We are recruiting in your local area. We need you now, and they need you always. Care for others. Make a difference. Today. Search adult social care jobs now.
From the Bloomberg Interactive Broker Studio in New York, Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg Radio, 2 hours away from the opening bell this Monday morning. Equity futures off the lows, still down 0.8%, negative 24 points, adding to the small losses of last week. In the bond market, Treasury yields, no big price action here, down just a single basis point, a 10-year, to around about 0.6%. In foreign exchange, here's the story for you. Dollar weakness against the bulk of G10, euro dollar coming in 0.5%. Sterling weaker by 0.75%. A little bit later this week, the focus on the data. Payrolls Friday just around the corner, and the numbers will be absolutely stunning. In the last decade, we created about 23 million jobs. On Friday, we could have a print, Tom, that is negative 21 million for a single month.
I tell you, folks, I looked at the ECO screen on a Bloomberg today, and John, the digits are, I've never seen it before. I mean, it's truly original, and folks will give you coverage here all through the week here as we lead up to that. John, what is your observation on the job economy now? To me, I've got to watch wages, and if we get disinflation and deflation, you just wonder what wage growth does.
I just think that where we are matters. And a lot of people have been willing to ignore that. Mohamed El-Erian over the weekend said something really profound. If you want to know where you're going, you better know where we are. And And if you don't know where we are, how on earth do you know where we're going? And that's why this data matters. It matters to the people who are on the receiving end of it, the people behind those terrible jobs numbers. And it really does matter to try and get a better understanding of what this economy will look like as we start to reopen. No idea when that begins, but when it starts, we need to know where we are.
And Lisa, the rent is due. I mean, maybe you go over the weekend, you go to May 4, and wrapped around this job struggle is the X percent of people. I have a working number of 30 million, even 40 million renters going, now what?
Yeah, and a lot of those renters are stores and small businesses that rent spaces. I was struck by statistics that I was reading over the weekend that more than 40% of the U.S.'s 30 million small businesses could close permanently in the next 6 months because of the pandemic. This is this is due to Chamber of Commerce survey data. What does that do to the composition of businesses going forward?
Well, there's that. John, this is so important. We're going to bring it up here before we bring in Jane Foley. David Frum with a brilliant tweet out over the weekend, and it was sort of British, John. It was Canada. You go to the website, you fill out some information, and you get a check in 2 days. That's not happening in America.
Well, let's be clear on the business side of things. The money has gone out very quickly. The phase 1 of getting these checks out to American small businesses, that went very, very fast. Phase 2, apparently, we're halfway through the money as well. I think where there was a problem, Tom, where there was a problem was the average size of the loan and the small companies competing with much bigger companies for the same pool of money. I am pleased to say the average loan size, according to our reporting, has come down to 79,000 in the second round from 206,000 in the first round. But I do think, and I still stand by this, I think we can do a whole lot more to help small businesses and prevent them from competing with much bigger ones for the same pool of capital.
I love that dynamic from 206,000 down to 79,000. That paints the picture nicely. Right now is a really important interview, folks. I'm looking down at the Plaza Hotel here on Central Park. Jane Foley knows the history of the Plaza Hotel, but what she really knows is 18 months, 17 months after the Plaza Accord 35 years ago, there was the Louvre Accord. The coffee was better there. And Jane, what's so important here is you can have dollar dynamics and all this international economics in China and the U.S. now and all that. And then it leads to instabilities where you've got to have a brand new meeting. How close are we to instabilities in the Jane Foley world?
Well, I mean, that is quite interesting. I think if the dollar continued to be at these sorts of levels, maybe for the next year or so, then I certainly think that politics would certainly be coming into that equation. But I think for now, it's perhaps too early to be wondering whether or not politics are going to come in, what politics are going to potentially do. But I think there's one thing that we can say is that we are still, I think, very much in the early phases of this crisis. What you've just been outlining with respect to unemployment is really just still the beginnings of the demand side aspect of this crisis. If we get to the end of the year, and as most economists are anticipating, we've still got very elevated unemployment queues and very suppressed wage inflation, then we are still looking at a very poor demand dynamic, and that is going to feed back into stock market valuations. It's going to feed through into all of the economic data that we're going to see, and it's not going to be a pretty sight.
And Jane, the way that people are trying to, or governments are trying to plug this gap, this demand gap, is by printing money and by issuing record amounts of debt. And we've talked about the U.S. set to announce its quarterly funding on Wednesday with a record batch of debt sales. But it's not just the U.S. It's also China, which is set to issue a record amount of local government debt. It's also in Europe, where the ECB is expanding its balance sheet. What is the long-term consequence of this massive sale of debt in nations worldwide?
Well, I think it depends which nation that you're in, because if you are issuing debt in a currency that people really want to have, which would be really most Western economies, the US obviously, and then European economies, they can issue debt and they'll probably do okay. But if you want to issue debt and you happen to be an emerging market nation and you do not have the patience of international investors just wanting or lining up to buy your debt, then you have an issue. And that is, I think, again, a real aspect of this crisis. I think the crisis that the emerging markets suffer could be really quite marked. And whereas Western governments can find a way through this, and it's going to be pretty tough, I think it's going to be really, really tough if you happen to be in a very poor country.
Jane, let's touch on the US dollar as well. Many people were talking about this for a long, long time, that in the next downturn, any crisis, whatever shape it might take, we might question the risk mitigating characteristics of the US dollar. Have we just cemented the status as the haven currency du jour, in fact, for a whole lot longer, the US dollar?
I think we have, to be honest, and I think this is a function of, the last 10 years, maybe the last 20 years, but certainly the last 10. For instance, if you look at the data from the Bank of International Settlements over the last 10 years, really after the global financial crisis, a huge amount of debt started to be issued in US dollars. A huge amount of cash of US dollars is held outside the US. A lot of this is used for transactional purposes, again, in emerging market countries. And because a lot of these have grown really very significantly in the last 10 years, there's just a need for dollars just to carry out businesses. So from that point of view, the dollar is a sort of a practical safe haven for many types of smaller businesses and people around the world, particularly in EM. And that's why I think when the dollar does eventually turn lower, it could be a while yet, and it could be linked to when confidence really does come back in emerging markets.
Jane, this is fascinating to me because the implication here is that the Fed essentially monetizing the debt of the United States selling an unprecedented amount of treasuries will have no effective consequence on the nation. I mean, that is sort of the implication here. If the dollar remains the funding source du jour and the prime way that people look for the currency. Is that correct? Is that your take?
Well, it certainly does seem to be like that. And to put that into perspective, I remember writing essays on this when I was at university, and that was a long time ago. And yet, we can project ourselves forwards till today, and we're still at this situation where, when does the market crack? Now, if you like, you can liken this to Japan. Now, in Japan, of course, they've got a huge amount of debt, much larger than the US, and they have been issuing huge amounts of JGBs. The Bank of Japan have been hoovering up huge amounts of JGBs as well. And for years, the market has said, well, are investors going to give up on this? Is this wrong? Are yields going to go up? And yet they haven't. And it seems that as long as credit rating agencies remain calm, then the market carries on buying this debt. And it seems as long as the governments do just enough to give this era of fiscal control, then the market seems to cope with this quite well.
Well, Jane, thank you so much. Jane Foley with Rabobank, and I would point out, folks, with a shout-out to Monographs by Joseph Nye, the giant of Harvard, and the great Jonathan Fenby, who talked about a resilience to the U.S. dollar through crisis, as John Farrow just mentioned. The Bloomberg NJIT STEM report brought to you by New Jersey Institute of Technology. They offer an MBA that provides STEM professionals with a technology-focused experience. Learn more at njit.edu/MBA. Here's Bob Moon.
Tom, Jonathan, Lisa, good morning. Here's what's making news in science, technology, engineering, and math. A lot of sports fans have been wondering how ESPN, Fox, and NBC Sportsnet would be filling the time with so many live sporting events on hold because of the coronavirus pandemic. Well, over the weekend, it went like this.
To the yard of bricks, they crash across the line. Scott McLaughlin's going to win. McLaughlin wins. Win it. How unbelievable. From pole position to victory at the Indianapolis Motor Speedway, Scott McLaughlin survives the carnage, clever strategy, fast laps, and wins.
It was a sporting event, technically and technologically speaking, on NBC Sportsnet. And Scott McLaughlin, who was supposed to leave Australia for Indianapolis this month to make his IndyCar debut, settled instead for a virtual victory on the oval at Indianapolis Motor Speedway. It was his second win of IndyCar's 6-race iRacing series after a wild finish in which most of the leaders crashed as they rushed toward the checkered flag. And when it's virtual, McLaughlin could say things like, hey, I was literally just hoping there was going to be a wreck at the end, and there was. He celebrated in the seat of his simulator in Australia with a glass of cold milk, a nod to the traditional victory celebration at the Indianapolis 500. He declined to pour it over his head while sitting in his expensive rig. That's your virtual Bloomberg NJIT STEM report. Tom, Lisa, John.
Bob Moon, thank you, sir. Thank you very much. Let's get you some news, some headlines worldwide. Here's Michael Barr.
John, Lisa, Tom, thank you very much. President Donald Trump promised a conclusive report on the Chinese origins of the coronavirus outbreak. The president, during a virtual town hall with Fox News, says that he had little doubt that Beijing misled the world about the scale and risk of the disease. He also revised his estimate on the number of people who will die from the virus.
we're going to lose anywhere from 75, 80 to 100,000 people. That's a horrible thing. We shouldn't lose one person over this. This should have been stopped in China. It should have been stopped. But if we didn't do it, the minimum we would have lost is 1.2 million, 1.4 million, 1.5 million. That's the minimum.
The president says he is very confident a COVID-19 vaccine will be produced by the end of the year. Kentucky has seen 253 new coronavirus cases and 5 new deaths over the weekend, for a total of more than 5,100 cases in the state. Governor Andy Beshear is urging protesters not to spread the virus.
Look at what it's doing in our long-term care facilities. You don't think at least one of the people who might have been there, who was encouraged to take off their mask and not socially distance, could pass it on into one of these facilities?
On Saturday, about 1,000 protesters gathered in Frankfurt, calling for the government to reopen the state. So-called murder hornets, insects that can kill bees, like we need this, are reported in the U.S. for the first time. The large invasive insects can be deadly to humans and pose a big threat to the country's already declining bee population. They've been spotted in Washington state and can grow up to 2 inches long. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts, more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, thank you, sir. I understand they can clean out a hive in no time. They go in there and rip off the heads of the bees.
Really?
Sounds quite disgusting, doesn't it? Didn't you read this over the weekend? I thought everyone read this over the weekend.
Of course, but why are we talking about murder hornets?
Michael Barr brought it up, so I thought I'd add a little bit of colour for you.
No, it's a big deal, John. It's a big deal. It's been around for decades, where certain species from Latin America have tried to come north as well. And of course, we're advantaged by the great Gary Schilling, arch inflation
who makes
analyst, who is actually knowledgeable on this, unlike the three of us. What bothers me, John? John, did you listen to Bob Moore's STEM report? Did you listen? Are we going to go virtual surveillance?
I think we are.
I mean, are we on borrowed time here?
This is it, Tom. This is virtual surveillance from New York City
Lisa's
this morning.
Not here.
Good
John's
morning to you all.
Is that the real John?
Surveillance. We are live on Bloomberg Radio.
Virtually.
With a Bloomberg Business of Sports report, I'm Michael Barr. NFL Players Association President J.C. Tretter is calling for a re-examination of a portion of the labor agreement with the league affecting disability coverage for former players. Tretter wants the NFLPA's executive board and the leadership of former players to come together to discuss some offsets in the collective bargaining agreement narrowly approved by the players in March. Tretter says the language the overall union membership voted on is not the same as what wound up in the deal that runs through the 2030 season. The NCAA is facing claims that it has repeatedly failed to address violence and harassment of female students by male student athletes. The complaint alleges that the NCAA has fostered a culture in which female victims are discouraged from reporting sexual assaults. And that is a Bloomberg Business of Sports report. I'm Michael Barr, brought to you by Marcus by Goldman Sachs. With a high-yield online savings account, you can money.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice app, or go to Babbel.com and try it for free. That's Babbel.com.
Global news 24 hours a day.
This is an important message from the government. For now, we must all still stay at home. It can be hard, but it's making a difference. So please keep going for the ones you love. Keep going for every key worker on the front line as they keep going for us. Keep going because together we will beat the virus. To all of you making sacrifices every day, thank you. Stay home, protect the NHS, save lives.
Imagine winning 10 grand. Yes! With Set for Life, you could win 10 grand every month for 30 years. Get in! Amazing! Woo! Yes! Sweet! Unbelievable! Set for Life from the National Lottery. Your numbers make amazing happen. Play Monday online or on the app. Prize may be capped. Rules, procedures, and game-specific rules apply. Players must be 16 or over.
It's Tune In Sports on this day. On this day in 2002, Barry Bonds hits his 400th home run. The San Francisco Giant in a 3-0 win against Cincinnati, making Bonds the first player with 400 home runs for one team.
That ball is drilled to deep right, and that could be number 400. It is! He has become the first man in the history of the game
to listen to conversations breaking down the moments just like this. Search sports to be part of the discussion on TuneIn.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, oh, well, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of like active
Round the Bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn.
At Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and Tyson Foods to face a slowdown in idle some production. It says supply chain disruptions will add to costs. Meanwhile, Ferrari lowered its guidance for the year. U.S. stock index futures are dropping with stocks in most of the world. And another sign the risk-off move that hit markets at the start of this month may have further to run. And we check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures down 22 points. Dow futures down 246. NASDAQ futures down 54. The DAX in Germany's down 3.5%. 10-year Treasury up 3/32, yield 0.60%. Yield on the 2-year 0.18%. NYMEX crude oil is down more than 5% on $1.06 at $18.73 a barrel. COMEX gold is up 0.9% or $15.20 at $17.1620 an ounce. The euro is at 1.0937 against the dollar. British pound 1.2434 and the yen at 106.82. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you very much. Here is the killer quote from Warren Buffett. The world changed for airlines, and I wish them well. Warren Buffett exiting his airline stakes. Delta, American, Southwest, United, all under pressure in early trading, Tom, as he dumps his airline stocks.
It looks like the rack off the Leaning Tower of Pizza as well. Brooke Sutherland joins now, expert on industrial and the idea that airlines are nothing more than industrial engines strapped to a piece of aluminum. Brooke Sutherland writing for Bloomberg Opinion. Brooke, where did he sell the shares? Did we get any knowledge of, was he incredibly prescient and got out of Delta at 60, or did he unload it at 21?
No, I mean, look, he was still talking in March about holding on to his airline stakes. And so I think, as far as the mantra goes, buy low, sell high, this is very much the opposite of that. And he acknowledges that he did take some losses on those airline stakes. Now, we don't know, exactly precisely when that was. But look, I mean, I think his concerns have to do with the longer-term trajectory here. I mean, I think at this point you have seen the U.S. government step in and backstop the airlines. That's clear. They don't want to see mass waves of airline bankruptcies as a result of this, in part to protect those jobs that the airlines support. But look, I mean, the airlines have been pretty clear that the measures that have been passed so far are a stopgap measure, and that when we get to September, all bets are off in terms of how they'll be able to protect their staff. And then Buffett's point was, look, eventually you have to pay back these loans to the government. They've also been tapping the debt and equity markets every which way in that they can. And so there is a difference in my mind between being able to survive this crisis and being an attractive investment at the end of this. And I think you can also carry that
over to Boeing and GE. Is if you look at those two companies, Boeing obviously raising $25 billion in a monster debt deal at the end of last week, it is going to be an extremely levered company when it gets out of this, and it's already backing out of investments in things like the new middle market aircraft. That was pre-coronavirus, and then post-coronavirus walked away from its Embraer joint venture, leaving it at a pretty significant disadvantage competitively to Airbus, and it lacks really the financial resources to then devote to building a new aircraft. I mean, I think what Buffett's point is, you have to take a step back and say, not just what are the opportunities right now, but what are the opportunities at the end of this? What are these companies going to look like, and how can they compete? And I don't know if airlines really fall into that category.
Brooke, I'm looking right now. United shares down more than 10% ahead of the U.S. Open in early trading. Delta shares indicated lower by more than 9%. And I think that you draw an interesting distinction here, not necessarily that the airlines are all going bankrupt, but that they're not necessarily a good investment case. Can you sort of draw that distinction a little more clearly? In other words, is Warren Buffett saying that the airlines are destined for some sort of government control or insolvency, or is he just saying that there is very little upside in a way that he had seen ahead of this?
Look, I think what we've learned from the airline CEOs who reported earnings so far, and also from Boeing and GE, is, look, they expect this to last a very long time. The Delta CEO and the Boeing CEO are talking about travel levels not getting back to 2019 type of traffic for 2 to 3 years. That is a really long recovery time. It's way longer than anything we're talking about for the rest of the industrial sector or the consumer side of the economy. And they're going to have to go through that recovery with a lot of debt.
Brooke Southern, we're going to leave it there just because of the technical difficulties of hearing you this morning. Thank you so much. I just love your industrial work. Guys, what's so important, I talked to James Bevan about this morning. There used to be a magic to Mr. Buffett's gold-covered annual report. It was simple, simple, simple. And you read with a sharp pencil, John, his letter, and he was outperforming everybody in sight. And it just hasn't been true. Bevan was articulate on this, and they just got too big where they couldn't move the needle. He's underperformed 10 years back. I can't remember the exact number, 100 beeps, 130 beeps. And back 20 years, John, he's underperformed SPX by 200 basis points. I don't get the religion of this.
Well, the opportunities weren't there. If we were in the world of pure capitalism and the Federal Reserve stepped out of the market and let things rip through March into April, Tom, Warren Buffett would have stepped in a massive way. The fact the phone didn't ring is because the Federal Reserve stepped in. And the wide open market that is the credit market right now means these companies can go back to the credit market, raise capital, and they don't have to call Uncle Warren for money. That's the big change between now and what we experienced in 2008, 2009. Now, I don't want to declare the whole end of this episode. I think that would be really naive and far too premature. I'm just observing where we've been over the last couple of months. And Lisa, I'm sure you'd acknowledge the same thing, that if the Federal Reserve had not stepped in and told us that they were intending to buy corporate debt, even though they haven't yet, but even the fact that they announced that they would, I think totally changed the game.
Yeah, I think that this is the question that I have about Warren Buffett's comments over the weekend, and I actually gave probably too much thought to this than I care to admit. But the question is, does his bearishness in opportunities indicate a bearishness overall in the direction of stocks? Does he see lower lows ahead, or does he just see a lack of upside, a lack of the kind of returns that he saw in 2008 and 2009? When he said a number of these companies were able to get money in the public market, frankly, at terms we wouldn't have given, is it because he was worried about the risk-return profile, but he thought that they were still money good, or does he see a wave of insolvencies? And I think that this is the big question right now underlying some of his comments over the weekend.
I don't know is the answer, Tom, and I don't want to spend the whole morning trying to work out what someone as wise and smart as Warren Buffett is thinking. I know that everyone will be doing that through much of the day and through the week as well. I think we can only reflect on the period that we've just come through, and the fact that he congratulated the chairman of the Federal Reserve for a job well done because he couldn't step in himself. Look, if we were in a different world, and I think that there's a strong correlation between the people that complain about what the Fed has done are often the same people who wanted to step into the credit market, distressed credit buyers. Now, I'm not going to name any names, but they're often the same people because they were the people back in 2008 that were getting the phone calls and they were able to set the terms, step in and buy at attractive prices. The Fed has completely changed all that.
Yeah, it's a very sensitive issue, and the bottom line is Wall Street could run the choreography in 08, 09, 10, and that's not the case here. This is a natural disaster we're dealing with.
Let's talk about it a little bit more, a little bit later, shall we, guys? Equity futures, here's your price action. We're negative 0.6%. We're off the lows. Things pick up just a little bit, down 17 points on the S&P 500. In the bond market, Treasury set up as follows. Yields come in just a basis point on a 10-year. From New York this Monday morning, good morning. This is Bloomberg Radio.
NJI, picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
We're all having to get used to the new normal, and at Birkbeck University, we're experts at being adaptable. As London's evening university, we've been flexing around the lives of busy commuters for nearly 200 years. And you can find everything you need to secure your place for autumn online. From expert advice to virtual tours, a live chat with our students and course applications. Make the new normal, studying for the career that you really want. Search Birkbeck, and it's new problem solved.
Imagine winning 10 grand. Yes! With Set for Life, you could win 10 grand every month for 30 years. Get in! Amazing! Woo! Yes! Sweet! Unbelievable! Set for Life from the National Lottery. Your numbers make amazing happen. Play Monday online or on the app. Prize may be capped. Rules, procedures and game-specific rules apply. Players must be 16 or over.
This is a message from the government to all essential workers. You're doing vital jobs to keep our country going. And you can now get tested for coronavirus. From health professionals to emergency services. From delivery drivers to grocery workers. From teachers to care workers. Tests are available for you and anyone in your household who has symptoms. For a full list of all essential workers eligible and how to get a test, go to gov.uk/coronavirus.
Blagging your way through the kids' schoolwork, pretending you always knew the capital of Brunei is Bandar Seri Begawan, when really you're frantically scrolling through the internet with your phone under the table, hoping that they just think you're an absolute fountain of knowledge. Whatever you rely on the internet for, rely on TalkTalk to stay connected. TalkTalk for everyone.
To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip number 4, relax. Don't feel like you have to be productive during these stressful days? This is the perfect time to focus on yourself. Whether that means meditating, taking a bath, sleeping in, or doing nothing at all, take a deep breath and treat yourself. For more indoor inspiration, search Listen from Home on TuneIn.
Wi-Fi connection spotty? Make sure you're never without something to listen to by offlining your podcasts on TuneIn. Just tap the 3 dots to download the episodes you want to hear. You'll find your offlined audio under your favorites.
Losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeart Radio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
We are being taken out of our comfort zone by the coronavirus.
Dollar weakness is pretty much a good thing for a lot of the rest of the world.
Finance.
We are going to see a global demand contraction this year, most likely, for oil. The financial health of the business sector has deteriorated somewhat.
Investment.
Obviously, the value in high-vol stocks are going to continue to suffer.
It looks as though the bond market is talking itself into a recession here.
Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz on Bloomberg Radio.
Good morning, everyone. John Farrell, Lisa Abramowitz, and Tom Keene. We welcome you on a May 4. No, it's not May Day, but it feels like May Day because it's a Monday after that exhausting week last week. Some challenges in the market. I'm going to call it risk off. VIX back out to 40. That really says it all. And we'll have to see from there. With yields in, yields stable, 2 years in, dollar stronger. Thanks, Gene Foley, for being with us here in a moment. But we welcome you across this nation, of course, in Washington and Boston. 1130 in a beautiful New York. Spring has sprung and all that in New York. Finally, the rain lifting away. And we say good morning, particularly to all of you working at home. We've been thunderstruck, as I'm sure society has, over everybody figuring out how to work at home. And, of course, for so many, that continues. Sell in May and go away. And, John, I think you've actually covered it more than I have. The Morgan Stanley shop. He'd be doing this, folks, on The Open. You can see it, 9 a.m. on Bloomberg Television worldwide. And whether it's Mr. Hornback, as we just had on, or Mike Wilson, gloomy, and then after the gloom came on strong, and he minced no words in a Saturday or Sunday note. Sell in May and go away. John Farrell, Mike Wilson said no.
Well, he's been quite constructive over the last several weeks, and I'm familiar with their views, so I can express some of them for our audience. They believe you should be adding a little bit of cyclicality, that the recession playbook applies, and as we come out the other side of this, it's the cyclical aspects of this equity market you want to add to.
Yeah.
And some of the other calls that have come from Morgan Stanley is that you should be shifting away from this mega cap dominance and adding a little bit of small cap exposure as well. We saw some of that last week, Tom. We saw that for 3 or 4 days, but it has been so rare and so absent from this market over the last several months. And there are many people still that believe mega caps will continue to dominate even as we work our way out the other side of this.
And the Costa noted, Goldman Sachs, we'll talk about that through the hour here, but that was extraordinary too, and definitely away from small cap as I perceived it. But Lisa, the small cap bet of Mike Wilson really folds into credit markets have to stabilize and improve. Are we seeing in high yield and IG, are we seeing an improvement there?
Well, I mean, stabilization really is what we're seeing. It's basically, again, flatlined. The Federal Reserve has backstopped these markets by not spending a dime, frankly, and by just basically promising that it's going to buy. What I'm struck by is this conviction that there is a buying opportunity here by the likes of Morgan Stanley and other very respected analysts who have gotten the calls right. And this lack of knowledge about the state of the current market. And Carson Block, the noted short seller coming out, Muddy Waters Capital founder, said, in the medium term, I just can't see equity values anywhere near where they are today. The underlying economy is on its knees, and I just think that investors have yet to understand that. The tension this morning.
That shows a sprawl of opinions. Julian Emanuel, I read every word of his note. He's got a note, folks, and then he's got 7 pages of Excel spreadsheet in a font that I think I couldn't read when I was 17. I certainly can't read it now. So Emanuel of BTIG
You're
is going to
complaining about our guest before they even get to speak.
They're fun.
No, but come on. He's one of these guys. It's like
do it at the end of the conversation.
It's like something off of a hieroglyphic at the Metropolitan Museum of Art. So anyways, Julian, translate for us right now. In this continuum, Julian Emanuel, where do you fit in on sell in May and go away?
Well, Tom, I hope you're going to disinfect the package with the magnifying glass that's going to be on your doorstep tomorrow. So that's the first thing I'd say. Look, if you think about it, it's very clear that the rally off the March 23rd low is very much about the Fed injections of liquidity, obviously the fiscal policy as well. And now we're at this point where we've come all this way, and frankly, what we're looking at is several weeks of uncertainty. How does the economy reopen? What does that look like? And crucially, do we have a spike in coronavirus cases?
Julian, great,
that's why May is risk.
Okay, beautifully framed. Julian, Robert Kirby, the giant of Capital Guardian Trust of 1 million years ago, would say opportunity, uncertainty go together. Is this with this uncertainty, lousy March, great April, is now the mother of all times to reaffirm optimism?
Well, we don't think it's right now. We think May could be rocky. Ultimately, we do think that in the bigger picture, it is a time to reaffirm optimism. But I think we have to be very honest and upfront about this. There is an element of medicine that needs to progress over the next 5 or 6 months. We're not exactly sure what it is. Obviously, a vaccine would be the best case scenario, but we do need some sort of medical advance or some sign that the virus is going to be less of an issue as we reopen the economy.
I totally agree, Julian. Science is going to be a huge factor in the reopening of all of this. I think there are some basic economic assumptions that you can make and start to think about the kinds of equities, the kinds of businesses you want to own in those scenarios. So let's talk about it, Julian. This could be a high-debt, low-growth world. Goldman is saying for that reason, you want to pay up for growth, buy the big players, buy the big five, buy the big tech companies. That seems to be the call for a lot of people on Wall Street at the moment. Increasingly a call on the margin of the conversation is something we discussed at the top of this program. Start to get exposure to small caps, the more cyclical aspects of this equity market. How do you manage your equity exposure right now, Julian?
So we are on the small cap cyclical side. We looked at every bear market over the last 30 years and absolutely with consistency, and think about it, it did vary. 2008, the financials led the way down. 2000, technology led the way down, etc. But invariably what we saw is all the sectors and the styles and the market caps that were the worst performers during the bear market phase ultimately led the market higher once you made the transition to a new bull market. And for us, that means financials, that means small caps, that means energy and industrials. It does not mean FANG, and it doesn't mean sort of the shelter-in-place beneficiaries, which we think are going to be sources of funds as we make this transition to a new bull market, which is still ongoing.
Right.
It didn't start.
Lisa, sources of fun is Julian Emanuel talk as they're going to sell the puppies.
Sell the puppies. Actually, you could get a lot of buyers right now. I hear the pounds are actually out of puppies because everyone's adopting puppies. Julian, I do want to get a sense, though, of the numbers versus the hope. And I'm looking right now, there's we're about halfway through the first quarter earnings reporting season, and the Russell 2000 Small Cap Index reporting companies are down 16.4% year over year. That is with respect to earnings, and that is much more than you're seeing in the S&P 500 in terms of the companies that have reported there. How do you square that with the optimism that you're expressing and recommending that investors go and buy these companies?
Well, you square it with this whole idea that if you think about the relative returns of the S&P versus the Russell, that is very largely discounted. You also look at it, and we think about it in terms of the risk. Several weeks ago, the Russell 2000 VIX got to an all-time wide versus the S&P 500 VIX, and that told you that, it was absolute abject panic in the small cap universe, even after the market had turned. And then the last thing we'd say about it is, think about the targeting of the stimulus. We're not, we're by and large targeting industries, but overall, the emphasis is on small town, small Main Street USA companies, which, by the way, make up a large part of the electorate this November. So we think it's in the price.
So, Julian, this conversation has gone the way of many of these conversations go, which is, why do you want to buy X? And then I get told because in history it shows X, Y, and Z. And I think we can all agree that this shutdown, this economic downturn is totally unprecedented. So with that in mind, isn't the comfort blanket of history totally redundant as we exit this?
No, I don't think so, because this has been so extraordinary that there really are only a couple of periods that you can measure against. And if you look at it, sort of the incredible crash off of an all-time high coming in a month or two really only harkens 1929 and 1987. And from our view, the reason this isn't 1929, where you wouldn't say, cyclicality is on the verge of bankruptcy and so on and so forth, is because of the response. We are now over 50% of U.S. GDP in enacted and proposed stimulus, right? And the question is, can that last? Yeah, it's an incredible number. Can that last long enough? There's an optionality to it, that putting our derivatives hat on, there's an optionality to, can it last long enough to get to a medical solution that helps reopen the economy? And we think the answer is likely going to be yes.
Julian Emanuel, thank you so much. Great briefing. Greatly appreciated. I'll look for the magnifying glass in my mail to look at his Excel spreadsheets as well. We've got lots more to come here. Good conversation. Please stay with us with our news in New York City. Here's Michael Barr.
Tom, Lisa, John, thank you very much. President Donald Trump is revising his estimate of how many Americans will die from the coronavirus. Bloomberg's Martin DeCaro reports.
The president's acknowledging the virus is deadlier than he believed weeks ago when he predicted 60,000 deaths.
We're going to lose anywhere from 75, 80 to 100,000 people. That's a horrible thing. We shouldn't lose one person over this.
At a virtual town hall on Fox News, Trump admitted intelligence officials did warn him about the coronavirus in late January, but he says the information was conveyed to him as if it was not a big deal. He faulted China.
It got out. China should have stopped it.
As the reported U.S. death toll climbs towards 70,000, the president continues to urge states to reopen for business, despite warnings from public health experts. In Washington, Martin DeCaro, Bloomberg Radio.
The state of Florida is reopening some businesses today, despite warnings from some doctors that it may be too early, risking a second wave of coronavirus cases. The reopening also includes state parks and beaches. The Senate will gavel in today for the first time since March. The senators face a national debate over how best to confront the deadly pandemic and its economic devastation. The House is staying away due to the health risks. Senator Elizabeth Warren topped the wish list for Joe Biden's running mate, along with Democratic voters. According to a new CBS poll, Warren had 36% support as voters gave her the first choice, with Senator Kamala Harris of California at 19%, Georgia Democrat Stacey Abrams at 14%, and Senator Amy Klobuchar of Minnesota at 13%. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John?
Michael Barr, thank you, sir. Thank you very much. As we count you down to a big week ahead, Payrolls Friday coming up, just to get people prepared for the kind of numbers that we could see this coming Friday.
Please.
Negative 21.6 million is the median estimate in our Bloomberg survey. The unemployment rate just a couple of months back was the lowest since the late 1960s. It's expected to climb to the highest since the 1940s. 16% is your median estimate, Tom, for unemployment.
I remember the angst of 08-09, Wells Fargo doing a great job, ING as well. 9%, 10%. Could we get to 11%, John? It was unthinkable then.
Truly unprecedented, Lisa, to see 21.6 million negative on any kind of screen for a single month.
Well, let's put this into a different perspective by Bloomberg Economics, that the April jobs report will likely unwind 20 years of job creation in a single month, putting the number of employed workers back to a level first achieved around 1999. They expect the unemployment rate to rise to 20% in the second quarter, and that's pretty much in line with a lot of other estimates.
The data you've got to prepare yourself for later this week in your market. This is how we're set up this Monday morning. We're down 20.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Influential conversations from Bloomberg Television.
Switch on Acorn TV, the brand new streaming service featuring world-class TV from Britain and beyond. Watch exclusive premieres like the colourful crime drama Queens of Mystery.
Once you have eliminated the impossible, whatever remains, however improbable, must be the truth.
And fan favourites like Inspector George Gently.
I'm just an old copper doing his job.
If you love drama with a little mystery thrown in, enjoy 30 days free with code ACORN30. Then just $4.99 a month. No adverts, no contract, cancel anytime. Join online today at acorn.tv.
The trampoline that makes Dad feel like a kid again. The projector that turns film night into outdoor cinema night. The hot tub that transforms your garden into a spa retreat. With a choice of ways to pay, you can make the most of family time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided. Subject to status by Shop Direct Finance Company Limited. 18+.
Breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. Disruptions from the coronavirus pandemic are so severe that America's top meat producer could not offer financial guidance for the year. Tyson Foods said plant shutdowns and slowdowns that have wreaked havoc on the industry in the past month are expected to continue pushing up operating costs and reducing volumes for the remainder of fiscal 2020. Futures, meanwhile, are lower, with airline stocks sinking this morning after Warren Buffett's Berkshire Hathaway dumped its stake in the 4 largest U.S. airlines. S&P futures are down about 20 points. Dow futures down 224, and NASDAQ futures are down 55. The 10-year Treasury, little change, yield 0.61%. The yield on the 2-year, 0.18%. NYMEX crude oil is down 2.3%, down 46 cents at $19.32 a barrel. COMEX gold up 1%, or $16.80 at $17.70 an ounce. The euro, 1.0941 against the dollar. British pound, 1.2443, and the yen, 106.78. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you. Thank you very much. China very much in focus, not just on the politics, but also on the economy as they slowly reopen. This from Morgan Stanley. From the early experience in China, we see that production ramp in manufacturing is recovering faster than consumption. And Tom, it's that recovery in manufacturing versus consumption that I think is key for the experience abroad, in Europe, and in the United States.
I spoke to family in Shanghai yesterday, John, and they found it remarkable how it was getting back to normal, how society was getting back to normal, even in the restaurants. Arinder Curran knows this. He follows not only the economics of China, but of all of Asia as well, our chief Asia economics correspondent. And is it really back to normal? I mean, Hong Kong and all your other reporting across Asia, is there a sense of normalcy?
There's definitely a sense that the cases have collapsed, Tom, not just in Hong Kong, but across China and most of East Asia. There's still a bit of a scare in Japan, but the cases there aren't necessarily getting out of control either. So it's a feeling that the worst has passed, but now everyone's watching to see if the consumer is going to come back, if we will see this revenge spending. I can tell you on the streets of Hong Kong, and we've been at this now since January, it is much busier here. The restaurants that are allowed to stay open are quite busy. The hiking trails and the beaches are packed, and I think that anecdotally we're hearing similar stories across parts of China as well. But we've still got a long way to go.
How slowly is consumption recovering, in your experience, Ender, from the numbers you're seeing?
I think slowly, Jonathan. I mean, all indications are that, yes, the blockade on Wuhan has been lifted, and yes, Beijing and Shanghai are getting back to normal somewhat, but by all accounts, the high-frequency data that we do have don't indicate a major rebound in retail spending, and we know that other indicators tell us the consumer is being cautious as well. So I think it's going to be a slow return back. You mentioned the manufacturing side of things earlier. There is a recovery on there. People do expect that will return to confidence faster than the consumer side. But even still, the PMIs are sending mixed signals. They were softer again in the latest readings. And look at South Korea. It's one of the great gauges for global trade. South Korea's exports tumbled again this month, and that's despite the fact that China is reopening for business.
This is the problem, isn't it? You can ramp up production, you've got no one to sell to. So let's talk about the sequencing of stimulus in China right now. Where are we with all of that, Ender?
We are waiting for the NPC at the end of May, Jonathan. That's the one you got to mark your diary for. That will be the all-important gathering of the basically rubber stamp parliament. As you know, it's meant to happen every March. It was called off this year because of the virus outbreak. And that's when we're going to get a big measure on the economic policy for the year ahead and what's left of this year. We'll get the growth target. We'll get specifics on stimulus. So until then, we're pretty much sort of flying blind, so to speak. But I think the view among a lot of China watchers is that there isn't much of an appetite in China at the moment for an old-school gangbuster-style debt finance stimulus package. They're still trying to tread something of a middle ground here, trying to prod and poke the economy along where they can. But if the rest of the world remains in a slump, then I think really there probably will be little option for China but to ramp up the stimulus as the year goes on.
You know, that's where I wanted to go, the sort of uneven nature of the recovery, the idea that China is reopening, but the rest of the world is still closed. And you talked about those PMIs with Taiwan, Japan, and South Korea all dropping to the lowest level since 2009. I'm wondering, with China's economy, can you talk about that tension with services perhaps picking up and sort of the domestic economy feeding into a little bit of a recovery, and the export economy just plunging still off a cliff? Can you give us some sense of the scope of that dissonance?
No, you're completely right. I mean, to be clear, services and consumption are the bigger drivers of China's economy nowadays, more so than the export side of manufacturing. But nonetheless, there is a clear dichotomy now. On the ground, there's something of a pickup in consumption, as you mentioned earlier. There's something of a pickup in demand, anecdotes of malls being busy again, restaurants getting populated. But again, it's nowhere near back to the levels that it should be. And at the same time, they're not getting that external dividend. Their key trading partners remain in the doldrums. Look what's happening in the US. Look what's happening in Europe. So regardless of what China can do on the ground, there's a limit to how far they can get back to the growth rates they had before the virus, because they're not getting any help from overseas. And that's probably one of the big balancing acts for China this year.
Then in 20 seconds, just frame for us your vision of their run rate of GDP. Is this a 6% China, or is it something beneath that?
Oh, it's going to be something much more realistic, Tom. I won't put a specific figure on it. We'll know at the end of May, but I think probably the days with a six handle are long gone.
Can we just get to the politics quickly, Ender, before we let you go? How's that playing out in Hong Kong, in mainland China?
Well, I mean, look, the thing is that I think there was a lot of criticism of the Chinese government's handling of this initially. But now, of course, with the US rhetoric being ramped up against China, China in turn is ramping up its own rhetoric back against the US. So each side are kind of boxing themselves into their own corner here. So I think that given where the US is in its election cycle, the US-China political tension story has a long way to run.
Ender, appreciate your time this evening for you. Great to catch up with you. Ender Curran there, Bloomberg Chief Asia Economics Correspondent, just speaking to some of the tension out there, politically speaking, Tom, and economically speaking as well.
Yeah, and they dovetail together. I mean, I can't fathom still, John, a run rate of, say, 3% on China, and I'm not wise enough to know what that means politically for China, or frankly, what that means politically for Washington. John, are you framing 3% or something like that for China?
Well, not me personally, but I think economists have got to think about that for this year, Tom.
Wow.
For the year, certainly, for 2020, down in those kind of numbers.
They have such a labor mandate across the nation. I mean, there's such a demand to get people employed.
That's the problem, that this whole pandemic, this economic crisis, Lisa, for this Communist Party is an existential crisis, and one that they've got to stop as soon as they can.
And there's a question about the middle class, sort of the state of the middle class, which had been growing and will be increasingly devastated because, as we've seen around the world, the small businesses are the ones that are getting most hit. And there's a question of how much leverage the PBOC is willing to incur, additional leverage on top of what they had been doing before in order to stave off some of the losses there.
And much more still to come on this program. Looking forward to bringing it to you. Right now, equity futures are negative. We are down 0.6% on the S&P 500, down around about 16 points off the back of Friday's losses. Just a little bit of negative follow through over the weekend. From New York, I hope you had a great weekend. Welcome back.
Rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
This is a Bloomberg Money Minute.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £63 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 21st of May to play in the June draws. PPL manage lotteries on behalf of good causes. 16+. Conditions apply. Play responsibly.
The pressure washer that means your patio is barbecue ready. The 4K projector that brings the thrill of the cinema to you. The yoga mat that turns your lounge into a studio. With a choice of ways to pay, you can make the most of your leisure time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided by Shop Direct Finance Company Limited.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the USwitch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
While most of us are looking out for each other at this time, sadly, fraudsters are trying to take advantage of the situation. Here's Chris Ainsley from Santander with advice for keeping your money safe.
Please be vigilant for suspicious calls that appear to be from your bank, the police, or the government. Remember, neither Santander, the police, or any other organisation will ask you to move or withdraw money for security reasons.
For more advice on keeping your money safe, visit santander.co.uk.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We are live on Bloomberg Radio, 1 hour away from the opening bar with equity futures down 0.5% on the S&P 500. We're down 15. The airline's under pressure in the early part of trading off the back of Warren Buffett's announcement that he has exited those stocks. Delta down by 9% in early trading. More pain.
I didn't know that.
Yeah, more pain for some of the airlines out there, Tom. The equity's lower. The bond market really not doing much, Tom. It's quite interesting. Yields now up higher on the session by 2 basis points to 0.63%.
I'm glad you mentioned that, because 3 hours ago, folks, was a different view. The 2-year had come in lower yield, even if U.S. was stable. But now, John, it really moves away from risk off. It moves away, and Swiss franc shows that. You really don't have that safe haven feel right now.
But hasn't that been the story over the last week or so, Tom? We had equities aggressively lower last Friday. On Friday, stocks were down by 2-3%. Bond market hardly did a thing.
And Mike Wilson is a bull, and Ben Laidler over at Tower Hudson's a bull, and they're talking about, Ben particularly is talking about much of earnings has come in actually pretty good versus the gloom we're all living now.
Well, that's it, isn't it, Lisa? It's relative to expectations, and not just earnings, but also on the economy. There seems to be this willingness to accept really, really ugly numbers. And Mohamed Al-Arian, and you referenced this conversation I had with him a week or so ago, where he just said a total failure to internalize how bad this is just because we can't. I mean, on Friday, we're going to have numbers of 21 million negative for a payrolls report for a single month.
Yeah, look, the numbers are horrendous. I want to draw a distinction, though, between what we're seeing in the bond market and some sort of risk-on feel. I wouldn't necessarily draw the conclusion that an increase in U.S. yields is a risk-on feel, because you're not seeing the same sort of optimism bleeding through in the equities, at least in the futures. This is more of an issue, in my opinion, from what I've heard from analysts about just the supply coming. And the fact that the U.S. is selling record amounts of debt, and what is a supply-demand dynamic when the Fed is hoovering it all up? And this is sort of the key question, more than risk-off, risk-on, the way it traditionally has, Tom.
And one of the statistics here, John, that's so important, we just heard it from Julian Emanuel of BTIG, is depending on how you do the math, 30, 40, 50% stimulus as compared to GDP of the nation. It's incredible.
Bear in mind, though, guys, it's not just about the supply, and this is something Goldman have touched on. It's about the effective lower bound and the limits to rates going lower in the United States. And they're just drawing the conclusion, and this was from Goldman a number of weeks ago, that the potential downside to equity looks larger than the upside on bonds. And that's the story here, that yields, what are the limits to how much further yields can go down? And that's something we've got to think about.
Opened a huge debate. To summarize so many of these themes, Carl Weinberg joins us. He has decades of experience, particularly on international economics, and joins us now on any number of topics. Carl, I just want to talk with a phrase du jour that is going to become a lot more familiar to our listeners forward, and that is yield curve control. What part of the yield curve does the Fed control? Is there evidence of that?
Well, good morning, Tom. That's a hard question to answer. It's not really clear what they're shooting for, what levels they're shooting for. The Australians have come out and told us the level they're shooting for with their yield curve control. The Japanese have. The Fed is just kind of, sitting and watching where things are right now. You introduced me, you said years of experience, but nobody has any experience with this current regime, Tom. We're all just learning about this as we go.
Yeah, well said.
Yeah, so I'm watching like you are to see where it goes, and what kind of new tricks the Fed will have for us. And of course, this innovation of yield curve control is an interesting one. I think it's a good one because it gives some dimensionality. It gives an exit strategy to the process of quantitative easing.
And Carl, there's a question also. In the past decade or so, people have justified equity purchases at pretty high relative valuations based on where benchmark yields were. They were saying on an earnings yield basis, et cetera, the S&P looks attractive. To what extent does that argument still hold true today, given sort of where the Federal Reserve is willing to hold benchmark rates?
Well, right now, where bonds are, what are the components for a bond investor? Coupons are negligible.
And, capital gains. What's the possibility of capital gains with 10-year yields at 63 basis points? I mean, there could be some. We could go down to extraordinary low levels. I don't think anybody believes that we're going to go negative. So, I think that the prospects on bonds, there are some prospects, but not that much. Potentially the top side on stocks is higher, but also the downward risk to stocks still remains because the economy is in quite shaky shape. And to the extent that the economy drives or contributes to people's expectations for the stock market, that support's not going to be there for a long time to come.
Carl, if we're talking to someone from high frequency, let's talk about the high frequency data. Give me your insight into the visibility you have, not just on the US economy, but on the global economy over the last month, looking ahead.
Well, it's awful. There's no other way to say that the world economy is in awful shape. The data we're getting for March are appalling. Last Thursday was probably the hardest day that I've ever had in watching the high-frequency data in my entire 50 years of doing it. Every indicator came out down by record amounts or near record amounts or amounts we haven't seen since the Great Depression or amounts we haven't seen since 2008. Right. There's nothing positive there.
In that mix, Carl, the wonderful Australian economist Justin Wolfers of Michigan put out a forceful tweet. I featured it, folks, in an opening script last week. We just got to fix this virus. Do you equate the rebound 100% to the pandemic? Just get this pandemic done so we can move on and recover?
Well, move on and recover is a great idea, but it's going to take years to happen. And I think that's the reality that we have to settle ourselves to. This is the start of a depression. If we contract at 10% per month for 3 months, the economy is going to be at a level that's 25% lower than where it started, round numbers. And from there, we start to grow again. We get the V-shaped recovery. Growth comes back again, but we're starting from that new lower level. Right? Last time around, some countries in 2008, some countries never got back to the levels of industrial production and employment that they saw back in the beginning of 2008. In the United States, it took 3 years to get GDP back to where it was, and 6 years to get industrial production and employment back to where it was. So we're in this for a long haul, Tom, and this is just, getting the economy going again is going to be hard. Supply chains are going to have to be restored. We're going to have to fix companies that are broken and do without companies that have failed. And these are all going to be hard things. This is not going to be a quick snapback. This is a big deal.
The numbers are brutal and a lot of pain being felt by a lot of people. I know that John's going to be speaking with Morgan Stanley's Chetan Aya coming up, chief economist, who put out a note yesterday morning saying that they expect this recession to be deeper than the one following the 2008 credit seizure, but a lot shorter, saying that he expects developed market output to reach pre-recession levels in 8 quarters versus 14 after the great financial crisis. Do you agree?
I couldn't disagree more. All right, this is so much more complicated to restart than after 2008 because we stopped dead, and in that dead stop, things will fail, things will break, companies will fail, and it only takes the maker of one teeny-weeny little part to halt an entire production line, and that's the problem we're going to deal with. Getting going again from this is going to be from a cold start, really hard and really slow, and it's going to require a lot of time and adjustment.
How long will it take before we get back down to 10% unemployment rates? It's amazing to think get back down to that at a time when people are expecting the rate to rise to 20% in the second quarter. How long will it take?
Well, Lisa, that's one of the unknowns. We need 3 ingredients to be able to judge the recovery. We need to know how deep down the economy is going to go. We need to know how long it's going to take to get to that bottom point, and we need to know how many firms are going to fail when we get to that bottom point, how many aren't going to come back, and what they are. You tell me the answer to those 3 questions, and I'll answer your questions. But right now, nobody, whether they're Morgan Stanley or Goldman Sachs or anywhere, can answer your question.
Right. A reality check coming from the Treasury Secretary, Tom.
Yeah, please, John.
Secretary Mnuchin speaking right now, I believe, on Fox Business. Hard to tell if international travel opens this year. And I think it's worth pointing out that Secretary Mnuchin is one of the more optimistic on the future and the snapback in the economy. And to hear Treasury Secretary Steve Mnuchin acknowledge that it's hard to tell if international travel actually opens up this year, I think it's a big statement.
Carl, this is so important what John mentions, and of course I think even his detractors have been impressed by the Secretary's forward thrust here at the very beginning of this crisis. Carl, do we work this out with the private system? airline restructuring, industrial restructuring, hydrocarbon restructuring, or do we do it with government assistance? Which way do you tilt on that?
Well, I think if we're going to keep our airlines owned in the United States and we're going to keep them running as they were before, it's going to require government assistance because they're way too highly leveraged, is my guess, to be able to survive this kind of an interruption in revenue. Now, there's another way out privately, and that is foreign investment coming in. And as you know, Tom, I'm thinking specifically of the Chinese coming in. Oh, come
on. China's going to buy Delta Airlines?
Well, if you can buy airplanes at 30 cents on the dollar, that's cheaper than buying them new from Boeing. And if you get a foothold in the U.S. market, which is a large market, then that gives you some edge in terms of expanding your global reach and your global power. So I would say that a U.S. airline would be a jewel in the crown.
Politically,
you think the U.S. government isn't going to reject that?
Carl, you think Unikill, Los Angeles.
This is where it gets interesting, okay? What will be the public policy response to this? But if you're looking at losing thousands, tens of thousands of jobs versus accepting a foreign investor, what do you do? This is what the Americans did after the Second World War.
Carl, we got to go, but you got us so riled up. You're going to have to come back soon so we can continue this discussion. Carl Weinberg, farmer from up north of New York City. He's with High Frequency Economics. Right now, with the news in New York City, here's Michael Barr.
Tom, Lisa, John, thank you very much. President Trump is blaming China for not stopping the spread of the coronavirus. During a town hall event on Fox on Sunday, the president said COVID-19 came from China and it should have been stopped. President Trump was also asked if he thinks having cadets' families present during the West Point graduation will put people at risk of exposure to COVID-19.
What they're doing is they're coming back a little bit early. They're going to be fully tested. They're going to be very, very spread apart. I said, I want their families to be there. You know, Mike made the commencement address. I did it last year at the Air Force Academy. Mike did it this year. There were no parents in a big stadium. And they were very spread apart, and it was fun.
The ceremony where President Trump is scheduled to speak will take place in June. At least 7 states today are set to start loosening up rules they put in place because of the COVID-19 pandemic. And governors also are taking different approaches on facial masks. New York Governor Andrew Cuomo emphasized their importance and said that masks are non-negotiable. While many Americans are working from home because of the pandemic, farm workers, considered essential workers, have kept working in the fields. The already burdened workers are now faced with even tougher conditions. Diana Torres is the executive director of the United Farm Workers Foundation.
What to do with their children since they're not currently in school has really been an issue, especially because many farm working families count on school to provide support during the day while they're working.
Torres says generally farm workers are in the field 6 days a week. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, thank you. I'm still sitting here trying to imagine, Tom, the United States accepting China's Marshall Plan on the other side of this. I mean, come on.
They may do minority investment, but in our airlines, I just
no way.
4% ownership maybe?
No way.
That's it.
National security issues? No way.
The memories of Unikill, I believe it was, out in Los Angeles a few years ago. I just don't see it, particularly, John, and you alluded to this earlier. It's not just the president. There is bipartisan support to be tough on China.
Equity futures right now recover. We're down 0.6% of the S&P 500. This song works, doesn't it? From New York. This is Bloomberg.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. So what's it like to be in the commercial office space right now? We spoke with Mark Halliday. He's Chairman and Chief Executive Officer over at SL Green Realty. And he says that, at least as far as April went, rent collections were pretty high.
We have excellent properties in Manhattan. We're Manhattan's largest owner of commercial office. And the tenants, by and large, are high credit quality tenants that are able to work from home in many respects. And our collections in April were about 93%. So, actually only a few ticks off of what it would have been in any particular month, because many of these businesses are built to last downturns more than just a month or two.
But Halliday says it's a different story for the retailers within its portfolio. He says collections in that sector were at just a little over 60% last month, and he expects to see something similar this month. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Hey, y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Connecting decision making.
Imagine winning 10 grand. Yes! With Set for Life, you could win 10 grand every month for 30 years.
Get in! Amazing! Woo! Yes! Sweet! Unbelievable!
Set for Life from the National Lottery. Your numbers make amazing happen. Play Monday online or on the app. Prize may be capped. Rules, procedures, and game-specific rules apply. Players must be 16 or over.
This is an important message from the government. For now, we must all still stay at home. It can be hard, but it's making a difference. So please keep going for the ones you love. Keep going for every key worker on the front line as they keep going for us. Keep going because together we will beat the virus. To all of you making sacrifices every day, thank you. Stay home, protect the NHS, save lives.
Be part of the college sports conversation on TuneIn. Hear the latest storylines around SEC football with the Paul Feinbaum Show.
I distinctly remember when you were hired, and I must say most of us thought you were out of your mind, giving up. I wouldn't call it a cush job because you were traveling across the country.
Get your college hoops fix with college basketball talk on NBC Sports.
Headed by Shabazz Napier. That also included Amita Brima, who is in and around the NBA ranks right now, and DeAndre Daniels, who was the 37th pick in the 2014 NBA draft. So my question to you is...
Or listen to the daily news from around the wide world of college football with College Football Live.
I would go with Utah. I think Utah is the better team. And I know I'm talking to an Oklahoma guy, but listen, and it may be recency bias having watched Utah last week and doing that game, but I just think they're a more complete football.
Discover these and more college sports podcasts right here on TuneIn.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. Cengage saying its merger agreement with McGraw-Hill has been terminated by mutual agreement due to a prolonged regulatory review process and the inability to agree to have a divestitures package with the U.S. Department of Justice. Futures this morning are falling, with S&P futures down 21 points, and Dow futures down 238, and NASDAQ futures down 60. The DAX in Germany is down 3.6%. The 10-year Treasury down 430 seconds, yield 0.62%, and the yield on the 2-year 0.18%. NYMEX crude oil is down 1.2% on 23 cents at $19.54 a barrel. And COMEX gold is up 0.4% or $7.30 at $17.0820 an ounce. The euro 1.0933 against the dollar. British pound 1.2421. And the yen is at 106.89. And disruptions from the coronavirus pandemic are so severe that America's top meat producer could not offer financial guidance for the year. Tyson Foods says plant shutdowns and slowdowns that have wreaked havoc on the industry in the past month are expected to continue, pushing up operating costs and reducing volumes for the remainder of fiscal 2020. That's a Bloomberg Business Flash. Tom and Lisa.
Aaron, thanks so much. Lisa Abramowitz and Tom Keene. One of our themes here on May 4, Cinco de Mayo tomorrow, is the idea of sell in May and go away. It's something we're exploring across all asset classes right now. Luke Kawa thinks about these things. He's got 3 Bloomberg terminals, 12 screens at his turret at 731 Lexington, and joins us now. Luke, sell in May and go away. Where do you go to when you go away from the equity markets?
Yeah, and where do you literally go to, right? Like now it's sell in May and stay inside and do nothing, I guess. But the go away part looks fairly challenging for a lot of folks. But we've had an instance where people felt comfortable going to cash. The problem is that the marginal value, the opportunity cost of cash is probably just not giving you any kind of yield. What we have seen, though, a willingness to do, and this might be something that it's larger institutions certainly are doing, is if you look at just your league table for how much issuance in credit markets is this year compared to like any other for a year-to-date kind of tracker, and you see it more and more in essentially Apple today and other companies coming out and tapping that market, you might start to see a shift to, well, rather than kind of after having pulled forward a lot of the recovery that we're hoping to get, why don't I just kind of clip coupons for a while and relax there and sleep a little easier at night with big companies with strong balance sheets like Apple tapping the market.
When you talk about sleep at night, you certainly have seen that stability in higher quality credit. I'm wondering about positioning heading into equities. I was reading some data showing that the short positions had increased dramatically in the latest CFTC data. What do we know there?
Oh yeah, the positioning data is so weird because whoever you talk to, you'll get kind of a different view on who's in, why, and what. So essentially, there's a lot of positioning data that says essentially a lot of this bounce back has been fueled by both short covering and CTA, but then you get essentially CFTC report that will occasionally point in a different direction. So it's been very difficult to tell. One thing we do know is that to the extent that long-short funds have done well this year, or better than the market, which isn't exactly a high bar to clear, it's because their short bets have paid off. And so maybe the short positioning moving up in general is a sign that we're moving to a stage where people feel more comfortable picking and pressing winners against the index rather than just kind of picking losers and hoping that those continue to pay.
Lukoa, you mentioned the Apple deal coming, I believe, this afternoon. It's going to be 2023, 25, 10 years out. And I think there'll be a little bit of demand for the 30-year piece as well. What will they do with that proceeds? I mean, they're short of cash, right?
See, this is great. Apple. This also comes as Apple has been for a while trying to equalize or get net cash to a certain level. So raising debt is a way to address that. But our friend over at Bloomberg Opinion, Matt Levine, pointed out last week that with Apple's essentially with its, I believe it was Apple with its repurchasing program and kind of staying on schedule with that, it's going to fill the hole in dividends that the rest of the S&P 500 universe is basically creating. So it's, and this is something I've been thinking about for a while. When you think about what kind of companies or stocks might do well on the other side of this, we've had so many companies come and raise money because they have to. And then on the flip side of this, worrying about balance sheet and putting bondholders first might be a priority. The companies that don't have to do that at all, that can continue to tap the market for shareholder-friendly actions, that can continue to increase their dividends because they're putting up better cash flow during this period, that list might be pretty small.
Yeah,
on the other side of this, and so far companies have been rewarding that.
I was about to say that list has been narrowed down to Apple and Amazon pretty much. I'm wondering, though, as we talk about the incredible amount of corporate debt sales that we have seen, how much investors are distinguishing between those that have high leverage ratios and those that haven't. That was a big theme earlier in the year. Has that persisted as companies just pile on more debt?
One thing that has been interesting, this is definitely in the high yield market, you're seeing it for sure. It wasn't Matt came over at Citi, it was Michael Anderson at Citi a couple weeks ago, who pointed out that a very small percent of the index, less than 1/5, once you take energy out of the equation, trades within 150 basis points of the average. There's so much dispersion in high yield, and there's so many things that are either completely blown out of the water or trading pretty tight. And then when you look at the index as a whole, it's pretty much only retraced about less than 40% of its widening. So it's definitely a yield market.
Look, very quickly here, I'm looking at the use of proceeds on this 4-tranche note offering from Apple. It's the usual boilerplate, folks, that you would see. Look, they've retired just under 24% of their stock in the last 5 years. Do you mentally just take that out where they're going to retire 47% of their stock over 10 years? I mean, why wouldn't you just extrapolate that out?
I think it's very hard to do anything but that right now, especially what's the big CapEx push unless we start to hear a lot of push around a completely new business line and segment that would be very CapEx heavy. I think the only thing you can do is extrapolate from the current trend.
Look, thank you. Luke Cowell of Bloomberg with a nice brief there. And of course, we'll watch the Apple. Look for particularly our coverage this afternoon, folks. I'm sure they'll announce that Apple tranche as well. Lisa, that's something. They're going to go out to a 30-year piece on Apple.
Yeah, my favorite is that this story talks about how Apple's heading bonds is raising money through the bond market, and so is Avis. It's sort of a tale of two companies, right? I mean, they both start with A, but that's about the only similarity at this point.
I could just see a Tim Cook in the car rental business. I mean, that works out as well.
Yeah, you think so? I think that, the only question I have with CapEx, there was some speculation that Apple would buy Netflix. Remember a long time back? I think that's been put to bed as Netflix has gained market share.
I don't know. I'm not qualified to make a statement to get myself in trouble on that.
Well, you do watch, Tiger.
I have marked on my calendar. Right? I will watch the Eddies. Now I watch 90 Day Fiance, but I'm going to watch the Eddies. Glenn Ballard of Alanis Morissette fame, doing music for the Eddies, a new Netflix property. This isn't Alanis. This is the Kinks. This is Bloomberg. Good morning.
NJIT.
Introducing the new single, Impossible. From Central American rock and blues trio, Steady Rolling. Their epic story of love and loss continues. Download and stream the single, Impossible, from the band Steady Rolling, wherever good music lives.
The pressure washer that means your patio is barbecue ready. The 4K projector that brings the thrill of the cinema to you. The yoga mat that turns your lounge into a studio. With a choice of ways to pay, you can make the most of your leisure time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided by Shop Direct Finance Company Limited.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £63 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 21st of May to play in the June draws. PPL manage lotteries on behalf of good causes. 16 plus. Conditions apply. Play responsibly.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
While most of us are looking out for each other at this time, sadly, fraudsters are trying to take advantage of the situation. Here's Chris Ainsley from Santander with advice for keeping your money safe.
Phishing emails are designed to trick you into giving away personal details. Messages might be about travel refunds, delivery tracking, or supermarket vouchers. Remember, never click on links or attachments in emails received out of the blue.
For more advice on keeping your money safe, visit santander.co.uk.
This is an important message from the government. For now, we must all still stay at home. It can be hard, but it's making a difference. So please keep going for the ones you love. Keep going for every key worker on the front line as they keep going for us. Keep going because together we will beat the virus. To all of you making sacrifices every day, thank you. Stay home, protect the NHS, save lives.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
We are being taken out of our comfort zone by the coronavirus.
Dollar weakness is pretty much a good thing for a lot of the rest of the world.
Finance.
We are going to see a global demand contraction this year, most likely, for oil. The financial health of the business sector has deteriorated somewhat.
Investment.
Obviously, the value in high-vol stocks are going to continue to suffer.
It looks as though the bond market is talking itself into a recession here.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Bloomberg Surveillance, Paul Sweeney and Tom Keene, thank you for being with us. It's not May Day. May Day was Friday, but it feels like May Day. One of our themes of the morning, sell in May and go away. Mike Wilson at Morgan Stanley just says no, no, no. And others a little more nuanced than there's all that caution out there as well. And Paul Sweeney, one of the great backdrops here to this week is the economic data. I mean, you and I can go all we want in the stock market. Forget about it. The unemployment statistics to look at come Friday are historically once in a lifetime.
They really are, Tom. I mean, you think about it, just over the last 6-7 weeks, over 30 million jobless claims have been filed, Tom. Just extraordinary numbers. That's real pain. That's real economic hurt. That's real people. And we're going to see that kind of crystallize a little bit here in that employment number on Friday.
Folks will see like 15%, maybe higher, 16, 17. We'll get some more data on that as we get ADP and claims on Wednesday and Thursday. Bloomberg Surveillance brought to you by Cohn Resnick. Advisory Assurance Tax for ideas to stabilize your business and find opportunity amid uncertainty. Visit the Cohn Resnick Coronavirus Resource Center at cohnresnick.com/COVID-19. And we thank Cohn Resnick for their support. I guess I'm supposed to make jokes, except no, there's nothing funny. The hardship here in American aviation is absolutely extraordinary. To provide scope and scale off of Mr. Buffett's comments, one David Wilson. David?
Well, Tom, I mean, you are seeing the airline stocks really taking hits in early trading. American's down 11.5%, Delta's down 10%, Southwest down 7.5%, and United also down 10%. Now, Buffett's Berkshire Hathaway sold its stakes in all four of the carriers. We found out Saturday when Berkshire had its annual meeting online, and Buffett talked about the airlines. Basically said the business has fundamentally changed. So, Berkshire's gone, and they had stakes something like 10% in a couple of the carriers at least. So, the definite turnaround after 4 years of investing in the airlines. And he also mentioned, Buffett did, that the industry shifts are going to affect aerospace companies. He's saying about Boeing, and that's down 4.5% in early trading. Also, General Electric, the jet engine maker, among other products, down 3%. And if the airlines are down, the cruise lines are probably down too. It's the way it's been lately, and it's the way it is today. Carnival's off by 8.5%. Royal Caribbean down 7.5%. Norwegian down 9%. We're also seeing the owners of casinos in the Chinese city of Macau falling. Now, gaming revenue in Macau plunged last month by 97%. Wow. That was even more than analysts expected. So you have Las Vegas Sands down 3.5%, MGM Resorts down 4%, Wynn Resorts down 3.5%. And we're seeing oil stocks fall as crude drops in New York trading for the first time in 4 days. ExxonMobil lower by 2%, Chevron down 1%, and in oil services, Schlumberger down 2%. Occidental Petroleum down 6.5%. Algeria is blocking the energy producer from selling Anadarko petroleum assets in the African country to France's Total. That's according to the Wall Street Journal, citing two unnamed people familiar with the matter. Also on the deal front, Liberty Global's Class A shares up 5.5%. People familiar with the matter said John Malone's international cable company is near an agreement to merge the wireless business O2 with its Virgin Media unit. Now, O2 is owned by Spain's Telefonica, which confirmed talks are indeed in progress. You've got Gilead Sciences up 0.5%. The news service Nikkei reported that the drug maker filed for Japanese approval of the medicine remdesivir as a COVID-19 treatment. U.S. regulators cleared that drug Friday for emergency use. Tyson Foods down 7.5%. The meat processor's earnings for the fiscal second quarter were far below analyst average estimate in the Bloomberg survey. Tyson said disruptions related to the coronavirus are reducing production and pushing up costs. And one more for you. Avis Budget Group down 7%. The rental car company is raising cash by selling $400 million of 5-year notes. The sale follows Friday's release of first quarter results, which showed a narrower loss than analysts expected.
Bloomberg Stocks editor Dave Wilson, thank you so much. We appreciate that update. Lots going on in the equity markets here pre-market. Well, with all this coronavirus impact, economic impact, really just kind of rippling across the economy, lots of volatility in the marketplace. Investors are looking for some safe havens. So you take a look at gold, and that's the classic. That's up about 12% this year. But guess what, Tom? Bitcoin is actually up 22% year to date. Is this actually a safe haven? Let's talk to our good friend Arthur Levitt, former chairman of the Securities and Exchange Commission and a Bloomberg LP board member. Arthur, thanks so much for joining us. What do you make of the performance of Bitcoin this year?
Well, it certainly looks like Bitcoin is beginning to attract real retail interest once more. And with worldwide stimulus efforts showing no signs of easing, traders are jumping into cryptos as a hedge against currency wars. So as governments increase the quantity of paper money, it takes obviously more pieces of paper money to buy things that have fixed quantities, such as stocks and real estate, above where they would settle absent an increase in the amount of money. And the corollary is that they'll also inflate the price of other things like gold, Bitcoin, and other cryptocurrencies. So people are flocking to Bitcoin in search of an alternative asset to store their wealth in.
Arthur, I know you're not expert at this, but I'm going to ask you the expert call. Do you have a methodology for finding fair value on Bitcoin? Is there some, not benchmark or Levian calculus, but is there a way to figure out fair value at any moment on Bitcoin?
I don't know what it is. I think the traders in Bitcoin probably each have their own methodology, but I know of no single formula for finding what that is.
Arthur, I want to go to the news flow, which is J. Crew filing for bankruptcy. Folks, I've read some of the details. I don't pretend to be an expert on this. Arthur, you've seen this a zillion times. Somebody paid up $3 billion 9 years ago for this closing shop. This would be TPG and Leonard Green, and they work it down to $1.6 billion, which evaporates into equity, and somebody ponies up a new $400 million to get them to start all over again. Is that a healthier process of workout than all the other modern stuff we're doing with our government institutions? I mean, is the kind of pain that we're seeing this morning with J. Crew more natural and ultimately more effective than our modern institutional workouts?
I don't think so. It's an alternate form, and what you're seeing is a function of greed, getting the most capital use with the least amount of capital. And J. Crew was a great company when Mickey Drexler formed it and developed it. And today, with financials, statisticulations, it just overreached. And in this kind of economy today, it's paying a heavy price for it and taking bankruptcy. Too bad.
Arthur, do you expect to see, I mean, we've had tremendous amount of fiscal stimulus, probably more likely to come. Given all that, are we going to see more J. Crew stories, brand names that everybody knows really going by the wayside here?
I think so, because many of these companies have had tremendous amount of their ownership taken over by funds, private equity funds in particular. And the name of the game there is maximum leverage. And when there's maximum leverage, I think there's maximum risk.
Yeah.
So, yes, I think we'll probably see some more of that.
Arthur Levitt, thank you so much. Always just terrific perspective. Arthur Levitt, the former chairman of the Securities and Exchange Commission, and of course, Bloomberg LP board member as well. Let's do this. I want to come back with Paul with his knowledge on all these corporate workouts. But first, the news in New York City. Here's Michael Barr.
Tom, Paul, thank you very much. Governors are facing pressure from the White House and some of their citizens to reopen their economies now, while cases of coronavirus continue to rise in several states. Bloomberg's Martin DeCaro has more.
The COVID tracking project says, excluding the New York area, infections, hospitalizations, and deaths are increasing in the United States. That's why Maryland's Republican Governor Larry Hogan says he won't abide the demands of right-wing protesters to end his stay-at-home order.
States try to open in a safe way. Unfortunately, the pressure is to do it in a not safe way.
After 1,000 demonstrators met in his state's capital, Kentucky's Democratic Governor Andy Beshear had to implore the crowd to keep their masks on.
Whether you believe COVID is real or not, I know it is.
An Associated Press analysis found most states are falling short of the minimum levels of testing suggested by the federal government to reopen safely. Martin DeCaro, Bloomberg Radio.
Greece has begun gradually lifting its restrictive measures after a 42-day lockdown to stop the spread of the coronavirus. As of this morning, Greeks are no longer restricted as to why they can leave their homes and don't need to send an SMS or carry a self-written permit justifying being outdoors. The first businesses such as hair salons and barbershops have also opened. It's a morning of first for the Supreme Court. It is the first time audio of the court's arguments will be heard live by the world, and the first arguments by telephone. The changes are a result of the coronavirus pandemic, which has made holding courtroom sessions unsafe, especially with 6 justices aged 65 or older and at risk of getting seriously sick from the virus. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Paul?
Michael, thanks so much. We talked to Arthur Levitt about J. Crew. Well, Paul, you and I have seen this a million times. Somebody goes in, they go in for huge money.
Yep.
X number of years later, boom, it doesn't work out. And then there's a good chunk of debt, in this case $1.7 billion, that evaporates into equity, and somebody puts in new money.
Yep.
I mean, that's pretty vanilla, isn't it?
That is pretty vanilla. It's a pretty vanilla workout. It's a stress debt situation. We see that a lot, and it's a question of, how much equity do the bondholders get in a reorganization here? And
the answer's not much.
Yeah, not much. And the question is, when there was a LBO situation and the private equity came in this case TPG, I believe, Tom.
TPG and Leonard Green.
And Leonard Green. How much of their equity that they put in did they get out? And usually they take it out, whether it's through dividends or fees and that type of thing.
Fair.
So it's a real question. We see it time and time again, but it's if you're a creditor, you really have to pay attention, obviously, to the all the stuff in the loan documents to see kind of where you fall out in any type of restructuring. Or
I would suggest, Paul, quickly here that the calendar is a huge deal for retail. I mean, this is about getting to, you pick the date in June, or getting to the date in July where they've got to have some form of revenue support, or else.
They're already starting to, just reading some stories on the Bloomberg today, Tom, where retailers are already worrying about the holiday season, being a bust here. And here we are
Memorial Day.
Yeah, here we are just in May here, and really thinking about it. So it's a never-ending issue. The retail sector, Tom, as we all know, has been felled by, the rush to e-commerce. Now you've got the pandemic and the impact on the consumer. So we'll figure this out. This is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Influential conversations.
The trampoline that makes Dad feel like a kid again. The projector that turns film night into outdoor cinema night. The hot tub that transforms your garden into a spa retreat. With a choice of ways to pay, you can make the most of family time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided. Subject to status by Shop Direct Finance Company Limited. 18+.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £63 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 21st of May to play in the June draws. PPL manage lotteries on behalf of good causes. 16+. Conditions apply. Play responsibly.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the USwitch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
News 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. We're watching shares of GE Aviation is developing plans for permanent employee reductions. It's planning cuts of as much as 25% this year. Shares of GE are down about 3% this morning. Starbucks long-term issuer default rating was downgraded by Fitch to BBB from BBB+. Futures are lower this morning with S&P futures down about 20 points. Dow futures down 249 and NASDAQ futures down 48. The DAX in Germany is down 3.7%. The 10-year Treasury down 5/32, yield 0.62%, and the yield on the 2-year 0.19%. NYMEX crude oil down 2.1%. It's down 42 cents at $19.38 a barrel. COMEX gold is up 0.7% or $11.40 at $17.1260 an ounce. The euro 1.0936 against the dollar. British pound 1.2434, and the yen is at 106.86. And that's a Bloomberg Business Flash. Tom and Paul.
Thanks so much, Karen. Greatly appreciate that. With the pandemic, with all the different news flows that we've had from it, and the statistics, the curve flattenings that we've seen and such, it's been important to get the perspective of the Johns Hopkins University. Joshua Sharfstein is with the Bloomberg School of Public Health. I should point out that Mr. Bloomberg is, of course, the founder of Bloomberg LP, this radio and television property, as well. And he's been a philanthropist to his engineering school at Johns Hopkins and, of course, the greater university. Here is Joshua Sharfstein, an update on the pandemic.
overall, it's a plateau in the United States. It's not really going down particularly quickly. And for, there are certainly places like New York where it is declining, but there are also quite a few places, even some smaller cities, where it is increasing.
Well, it's increasing as well. Can they use the same methods from New York? I mean, what is the difference in medical treatment in Baltimore or New York versus the remoteness of some of these new places in America?
You mean you're putting your finger on an important issue, which is that the hospital system is not nearly as robust in many places. Many of the hospitals have closed in rural areas. Those that are open are very small and financially unstable. And so this has created an enormous challenge. People are going to, so it creates this dynamic where people may feel like, we're never going to have a problem like New York, but it doesn't take a problem like New York to tip that entire local healthcare system over.
There is all sorts of issues here about getting out of lockdown, all the images over the weekend and all that. What have you learned in the last 24 hours about getting out of lockdown?
Well, I think that people have to look past just the overall government decision. I think what's really going to matter is whether all of us, all the businesses, are following good public health guidance to stay away from each other, to continue to physically distance from each other. That is as important, I think, as some of the specific policies that are put into place. If people just go out and defy what's being done, it's going to be very hard to keep this disease under control. And if we open a little, which may be appropriate in some areas, but people take that as a green light to do whatever they want to do, it's really going to be a problem. There's nothing holding this disease back except our ability to stay away from each other right now.
Josh, when are we going to be able to understand this disease better? So there are a number of studies also trying to understand genetics, to try and understand why in certain countries, the mortality rate is much higher than others, although the lockdowns were very similar. What are some of the questions that you want answered to understand it better, and how soon can those answers come?
I think there are some very important questions, including some continued questions about how the disease is transmitted, and the role particularly that children play in transmitting the disease. I think that's going to be very important as we think about whether and how to open up schools. There's also some basic issues about the illness, why people with certain conditions are at so much higher risk of dying. And is there any way to predict early in the course of disease who is going to have a more severe illness? I'm also very intrigued by the reports that perhaps earlier medical treatment of certain kinds really helps. I mean, if that can be established, that could be very, very important. If it turns out that earlier oxygen therapy or some other type of intervention matters, that might change the way that medical services are organized and keep a number of people out of the hospital. So I do think that we've gotten a lot of scientific information, and we're going to see every week more and more insights. I think the frustration is that science doesn't necessarily operate by, one big headline and everyone agrees. It's going to be like these little, incremental steps, a couple steps back, a couple steps forward. But it's the kind of thing when you look backwards, you'll see how far I think we've come in our understanding.
What can you tell us about the Gilead therapy? So there was a setback, and now it seems to be on better track. Again, can we find out by the summer if this is one of the biggest hopes for the world?
This particular therapy, I think, is going to be potentially of some benefit, but most likely not of like a major, tremendous benefit. I think what I mentioned last time, I still think, which is we're going to have to see the ongoing studies which are using that drug at different stages of the illness, because the medicine might work so-so at one stage of the illness, but work much better or not at all at a different stage. And so it's going to be like a bunch of little studies that will add up to a much greater understanding. And then as we learn more about a particular medication, we'll learn more about the disease. If it turns out that, trying to block viral replication really makes a lot of the difference if it's given early, if the drug's given early, that might help us target other kinds of therapies. So I'm hopeful that we'll learn more from these other studies that will round out the picture of remdesivir.
Joshua Sharfstein, the Johns Hopkins University Bloomberg School of Public Health. Paul Sweeney and Tom Keene trying to get to the market opening. We'll do that in 5 minutes. As well, Paul, tape ugly overnight, ugly 4 a.m., 5 a.m., and it's improved a little bit. The VIX was out to 40. We're back to 39.15 on the VIX, up 2 points. It's a challenging morning, but I don't want to oversell it as gloom. Paul, Dow futures at negative 222.
Yeah, I think exactly right, Tom. I think this is I would have to characterize this as a fairly calm kind of futures market here, taking a little bit of a downdraft from Warren Buffett's commentary perhaps over the weekend. He didn't really put any money to work in large part because the Fed came in so aggressively and kind of brought the market back a little bit. But I think, him getting out of the airlines, him just showing some caution, I think that's all the market needed, just kind of step back and pause here a little bit.
I thought Kathy Chinglisi's essay for Bloomberg was really smart. Folks, in it, she gracefully said the track record of Berkshire. And Paul, without any animosity to Mr. Buffett, the fact is over 10 and even 20 years, I guess it's sort of kind of like worked out, but it hasn't. I mean, it's underperforming by 80, 100, even 200 basis points a year, depending on which, time frame you pick.
Yeah, exactly. And I think sitting on $135 billion worth of cash, that's not generating market returns for you in this certainly the last 10 years. That's not where you want to be. So we're looking at the markets here. Again, a weak opening. We'll have that for you in just moments.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing, LLC. Member FINRA, NYSE, SIPC.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
This is a Bloomberg.
A half-price dream holiday. Wouldn't want to miss that. A takeaway for free. Wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the U-Switch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
When next in Asda, why not try our new mobile Scan and Go app? Simply download the app, scan your shop with your mobile, and pack as you go. Then head to the self-checkout to pay. Quick, easy and contact-free, so you have more time to get your cook on. Asda. Mobile data charges may apply. Suitable for iOS 9 and Android 5 or above. Selected stores subject to availability.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
Good morning. I'm Karen Moscow along with Tom Keene and Paul Sweeney. And the S&P 500 is lower at the open. It's down 0.7%. It's down 20 points at 2811. The Dow Jones Industrial Average down 0.9% or 216 points at 23,490. And the Nasdaq's down 0.5% or 44 points at 8561. 10-year Treasury down 6/32. The yield 0.63%. The yield on the 2-year 0.19%. NYMEX crude oil down 1.7% on 35 cents at $19.42 a barrel. COMEX gold is up 0.6% or $9.80 at $17.1080 an ounce. The euro 1.0925 against the dollar. The yen is at 106.85. Tom and Paul.
Karen, thanks so much. Paul Sweeney and Tom Keene. Bill Smead joins us right now. Smead Capital and, of course, value investors. They sort of like Sequoia, like they own 25, 30 stocks, some real concentration there, less diversified, and they're in the value space. Bill Smead, your track record over long term is nothing short of an act of God. It is a miracle, unlike the last year. You know, any way you want to look at it, it's been a tough slog for large cap value away from the 7 or 8 stocks doing well. How do you manage that forward?
Well, you get more excited about it, Tom. We took a look about a week ago at the year-to-date, 1 year, 3 year, 5 year, and 10 year on the Russell 1000 value versus the Russell 1000 growth. And the spreads were 15%, 20%, 50%, and 145%. So what it tells you that in virtually every single time period for the last 10 years, growth has beaten value. And that's, we find that really a key in, for example, the Berkshire Hathaway meeting. Because from a value standpoint, today is a great day to be a Ben Graham person, right? This is a great point in time to be somebody that looks at asset values and cash flows and all those kind of important things for today. And we definitely like this market for that reason.
All right, so give us your sense of your takeaways from Warren Buffett over the weekend. He's always been enthusiastic about America long-term, American exceptionalism, but it didn't necessarily come across in some of his actions. What were your takeaways?
Well, first of all, you have to understand the capital structure of what he's running, right? He's running a $500 billion market cap company with $130-some billion in cash. And for him to be able to buy something, it's got to be a very large company that is very deeply out of favor. And the very largest companies, as Tom mentioned in the intro, they've had favor. Mason Hawkins calls it quality at any price. See, when you're buying a dip and you're paying 30 times for Costco or 35 times for Visa or 80 times or 100 times for Netflix and Amazon because they seem to be benefiting from the misery, you're exacerbating the growth trend, and then there's massive selling on the value side, and there's no capital in the hands of the value people to sit there and buy with bids below the market.
Yeah, but Bill, I get that, but the fact of the matter is their revenue profile forward, it's like Mars and Venus. I mean, the revenue profile of some of those high-flying techs is extraordinary compared to low single-digit.
If revenue profiles were important, and that was the most important thing, Target's revenues are up 8%, mostly on the back of their e-commerce business exploding, and groceries, which are low. In other words, the thing that's doing the best for Target at the moment is the thing that Amazon does, and Amazon is Target's finding out the same thing that Amazon's finding out, is that even when the business is as good as it could possibly be, there's no margins in it. And where Target's going to make a lot of money is we're going to have a zillion 4-year-old kids in 4 years, and the Oshkosh Bagosh overalls are going to fly off the shelves, and there's huge margins in that. And by the way, a week ago there was a survey in the states that were about to reopen, and they asked people what are the 3 things they'd most like to do that they haven't been able to do. It was travel, clothes, and entertainment.
Yep, exactly. So, Bill, are you concerned?
Bill's fired up today, Paul.
He is. I'm wondering, Bill, I'm going to tap into kind of your experience here, your vast experience in the markets. One of the things people are concerned about, or not concerned about, or just wondering about is, will consumer behaviors be altered, maybe permanently by what's happening here in the pandemic? Is this something akin to the Great Depression of the 30s where it kind of impacted a generation and consumer behavior? Are you thinking about some of those bigger issues and how people's consumer behavior might be impacted?
I personally believe, and we as a company believe, that people are drastically overestimating this. Okay. They're overestimating. And let me give you an example. When I was 15 years old, 16 years old, I kind of got bored with a lot of subjects in high school, but I was always excited to go there every day because the state had a mode, 180 days a year. The cutest girls in my hometown had to go there, the 16 to 18-year-old girls.
It's just appropriate. It's just family.
Okay, so what's going to happen? What's going to happen as soon as we open up? The 15 to 25-year-old kids are all going to gather somewhere where they think the opposite sex is going to be there.
How did we get here?
That'll drive the economy.
I don't remember this in the CFA curriculum, Bill Speed.
Exactly.
Bill, are you under-diversified now when you have this shock, when you have the economic backdrop we've got? Should I be SMED diversified or should I try to be more over-diversified?
No, just the opposite. See, that's the deal with the market.
Explain that to our audience, please.
Yeah, so here's Buffett recommending the S&P 500 index. He started his talk explaining that from 1929 to 1954, the index of the day in 1929 was the Dow, and it went nowhere for 25 years. Now, think of the time period since then. From 54 to 66, the index was good. From 66 to 82, the index was terrible. Yeah. From 82 to 99, the index was good. From 99 to 2011, the index was terrible. And then up until 2 months ago, the index was really good for 9 years. Okay, so what does that tell you? It tells you that half the time the index is terrible. Sure. And the index is usually terrible beginning with a point in time where it's extremely popular and it gets heavily overweighted in the most popular stocks. And that's one of the reasons why we're so excited.
Bill Speed. Well, one final question. What do you think of the financials? Our audience wants to know if you find value in the financials, or do you have to go to Europe to look at their bank valuations?
No, we're excited about the financials. The fact that Buffett couldn't say more nice things about them, even though he thinks very highly of them, to me was a buy signal.
Did he give a buy signal on the airlines?
It's funny you mentioned that because I looked and I thought, gosh, if those things go down, see, they're a lot lower than where Buffett sold them. Yeah. And then they're probably down another 10% today.
They are. David Wilson said that.
Yeah. I remember two instances. We stopped flying for 18 days after 9/11, and it took a while to recover. And then in 08-09, obviously things backed way off in the airlines. And I can remember we were out starting to promote our company. We started in 07, and the fund started at the beginning of 08. So in 09, 010, 011, we went on what we called the no tour. We flew all over the country and pitched what we were doing, and everyone said no. But the fares were cheap, but by the end of it, the fares weren't cheap, right? In other words, by 2 or 3 years into it, everybody was back to flying.
I like that. I'm going to steal that from Bill Smead. The surveillance no tour. Bill Smead, always thank you so much at Best to Value investing with Smead Capital today. Paul, this is, you and I are laughing about this, but folks, the history of this is over a given 10 years, Paul. How many times does value outperform growth?
Oh, it's a tough business there.
In 10 years, like once or twice, right?
Yeah, it really is.
There's a general statement. Good morning to all of Phil Correa and all the great people at Pioneer up in Boston as well. But, Paul, granted, when it goes, it really goes, doesn't it?
It does, and then you look back and you say, "Gee, how can I not see that value there?" Certainly relative to what was the hot sector, whether it's the FANGs or just the market in general.
Yeah, just like Paul Sweeney says, folks, it's a tough business. A joy to catch up with Bill Smead, and I think of David Harrow, the great value investor as well, with just terrific long-term track records. Right now, with a pretty good Monday morning track record as someone who can give us the news from New York City. Here's Michael Barr.
Tom, Paul, thank you very much. President Donald Trump is acknowledging America's fears about the coronavirus crisis. He says the nation is ready to begin reopening the economy. In a virtual town hall televised last night from inside the Lincoln Memorial, the president was asked if he will urge schools and colleges to reopen in September.
I watched a very good former governor of Indiana, he preceded Mike Pence, good governor, and he's the head of Purdue. It's a great school. And I saw him the other day. He wants to go back. He's going back. Purdue, big school, fantastic. They're going back. We have to go back. We have to go back. And whatever it is, I would say, with the exception of teachers at a certain age, maybe they should wait till this thing passes. It will pass.
The president also increased his projection for the U.S. death toll to as many as 100,000, up from 60,000 just a few weeks ago. The new week brings more reopenings across the U.S. after a weekend many Americans spent outside, from protesting coronavirus restrictions to enjoying spring days in the park. Across the nation, states will continue to slowly ease their restrictions this week, even as the number of cases and deaths rise in some states. Florida, Colorado, Indiana, Nebraska, South Carolina, and West Virginia are among the states that plan to ease restrictions today. And California Governor Gavin Newsom says the state is days, not weeks away from beginning to lift restrictions to stay-at-home orders. However, Los Angeles Mayor Eric Garcetti says he does not think the city will reopen earlier than May 15th. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Paul?
Michael Barr, thanks so much. Paul Sweeney and Tom King. Quickly here, Paul. Sell in May and go away. Did that ever work for you?
Actually, that has worked quite often, Tom. You see that time and time again. But as we sit on the beach in the summer, we're like, why didn't we sell last month? And then the other thing that kind of always jumps out at you when you take a look at the calendar is October, how rough October has been for markets. And I have no idea why that is really, but I kind of started in this business in '86, and that one of the first Octobers was October '87 with the market crash, and that's something that shapes your thinking going forward.
Okay, I'm going to go all chronological, folks. Paul, how do I get from sell in May and go away to October? Is it just assumed I get back in the market at some point before I get out in late September?
Yeah, I think that's what happens. I mean, everybody's got to, people got to be in the market. They got to be in cash. I mean, they can't be in cash. So you kind of try to pick your spots in the market. And that is a very difficult chore. Only for the best and brightest can they do that. So, I think what we hear from a lot of strategists, Tom, on surveillance is, like a Barry Ritholtz says, take the long term, diversify, take the long term. Don't try to pick the market tops and bottoms. Otherwise, you're going to either have gray hair like or lose the hair.
I will suggest, folks, with great respect, and I steal this from American Funds and Capital Guardian Trust. They've done a lot of study of timing, and UMass Amherst has done great work. Vanderbilt as well. You know what? It's not getting out, folks. That's the easy part. It's when do I get back? If I sell in May and go away, when do I get back in if I want to play in the game? I don't know.
Yep.
We'll have to see. Ron Wood at the Ginger Baker Tribute with Eric Clapton. Wow, he was outstanding. This is Bloomberg. Good morning.
This is a Bloomberg Pursuits look at luxury. In the era of shrunken corporate budgets and a growing embrace of video conferences spurred on by travel restrictions, business class extravagances for road warriors risk becoming relics of a globe-trotting past. No airline is more at risk for this than Emirates, the high-flying Dubai-based airline known for its in-flight bars, first-class showers, and exceptional service, boasts the world's biggest long-haul fleet. It spent $130 million on wine alone last year. On long-haul flights, business-class customers are approximately 5 times more profitable than standard economy passengers, and it's doubled down on that segment. At home, The Last Dance overtakes Tiger King as the world's top documentary. ESPN's Michael Jordan documentary has been a boost for the cable giant at a time when the coronavirus pandemic has shut down live sports and slashed its audience ratings. Nonfiction television series as a whole are having a moment during the coronavirus pandemic. I'm Andrew O'Day, Bloomberg Radio.
Debbie Hart is president of BioNJ, which represents the interests of more than 400 New Jersey-based biotech companies. She's also a strong voice in the biotech sector, supporting research universities like New Jersey Institute of Technology. She sees NJIT as a valuable partner in attracting venture capital and biotech startups to the Garden State.
So the number one reason the companies come here to New Jersey for the biotech industry is for our talent. We estimate that there were about 30 biotech companies in the early 90s in New Jersey, about 80 in 1998. Today there are more than 400. And that growth continues, and it's come from every possible angle. Other countries, other states, they've spun out of our academic institutions as well as our biotech and our pharma companies, and we expect that growth to continue long into the future. And NJIT is a pipeline for talent, for companies, for entrepreneurs to do that important work.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Global news 24 hours a day.
Imagine winning 10 grand. Yes! With Set for Life, you could win 10 grand every month for 30 years. Get in! Amazing! Woo! Yes! Sweet! Unbelievable! Set for Life from the National Lottery. Your numbers make amazing happen. Play Monday online or on the app. Prize may be capped. Rules, procedures, and game-specific rules apply. Players must be 16 or over.
Hey, y'all, we're taking the Marty Party to a whole new level with the Marty Smith's America podcast with Gerald McCoy.
I truly believe that Carolina made a mistake letting Cam go. This is not a personal shot at Teddy Bridgewater. This could have been Andy Dalton. This could have been whoever they brought in. Cam has so much left. Somebody's really getting a great one, man. And I don't think people really understand what they're getting.
Search Marty Smith America to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
It's TuneIn Sports on this day. On this day in 2002, Barry Bonds hits his 400th home run. The San Francisco Giant in a 3-0 win against Cincinnati, making Bonds the first player with 400 home runs for one team.
That ball is drilled to deep right, and that could be number 400. It is! He has become the first man in the history of the game
to listen to conversations breaking down the moments just like this. Search sports to be part of the discussion on TuneIn.
4 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stocks are following stocks in most of the world lower, signaling the risk-off move that hit markets at the start of this month may have further to run. All three U.S. equity indexes open lower, with Delta Airlines, American Airlines, and United among the decliners. Warren Buffett saying over the weekend that Berkshire Hathaway sold out of the top 4 U.S. airlines, opining that the business has changed in a very major way. We check the markets every 15 minutes throughout the trading day on Bloomberg. The S&P 500 is down about 1.1% on 29 points at 2801. The Dow Jones Industrial Average down 1.4% or 333 points at 23,390. And the Nasdaq is down 0.4% or 33 points at 8574. 10-year Treasury down 7/32, yield 0.63%. The yield on the 2-year 0.18%. NYMEX crude oil is down 0.3% or 5 cents at $19.73 a barrel. COMEX gold is up 0.8% or $14 at $17.1470 an ounce. The euro 1.0930 against the dollar. The yen is at 106.83. Taking a look at Delta, it is down more than 8% right now. American Airlines down about the same, and United is down about 7%. And that's a Bloomberg Business Flash. Tom and Paul.
Karen Moscow, thank you so much. We appreciate that. We have a risk-off day, as Karen was just reporting here, kind of showing the volatility in this market. Peak to trough, the market came down. The S&P, that is over 33%. We've since clawed back in the month of April, maybe half of that. Now the market's taking a little bit of a pause here. To get a sense of what's going on out there in the markets, we love to talk to our good friend Vince Signorello, macro strategist on Bloomberg Squawk. I'm sure you've all heard him on the terminal. Vince, thanks so much for joining us. Step back and give us kind of your 30,000-foot view of kind of where we are in the markets right here.
I know, as you mentioned, good morning, by the way. The markets are trading with a bit of a heavy tone. We're looking at the Dow down about 1.3%, S&P down 1% in the morning. But it's orderly. I mean, it's really an orderly sell-off, I think, that we've seen in the last few days. It's not been the panic. I think you're just seeing a natural. Some folks, as obviously Warren Buffett did over the weekend, trim some positions. But it's not. It doesn't have that sense, to me, of a great deal of anxiety in the markets.
Vince, what's the depth of the market? I mean, volume. I don't, folks, full disclosure, I'm not a big volume study fan. I'm not too breadthy, on all that. But Vince, let me ask you, because you're the grizzled pro at this. Is the breadth out there? Is the liquidity out there where it's a orderly market across all asset classes?
It changes quite a bit. Like right about now, you're seeing a lower volume in the Dow, but you're seeing better volume in the S&P and the NASDAQ. So tech has been holding up better than, I guess, the rest of the market, at least in terms of volume-wise. And that goes both ways. That's on the upside and the downside. In the currency markets, it's been really choppy and really illiquid. You watch a currency like dollar CAD, for instance, and it's generally an orderly currency. It's not the kind of currency big figure moves in, and now you're seeing the thing move pretty heavy. Mexico is trading like 10, 20 big figures at a clip, which is not new. I mean, for the currency to trade volatile is one thing, but for a currency to move that aggressively in one direction and back again is unusual.
Paul, be sure Vince gets the memo that we're trying to be jargon-free here. I mean, Mexico, I get. I think that's it's either a James Taylor song or the Mexican peso. I'm not sure which. What is CAD? That's Canadian?
Dollar CAD, yes.
So we go on a limb on surveillance, Vince, and we call that the loonie. Oh, okay, that's as sophisticated as we get.
If you really want to get jargony, traders call it funds.
Hey, Vince, let's talk about volatility. Tom, rightfully so, throughout surveillance really gets our listeners to focus on VIX here. And we've kind of grew up with the VIX, 12, 13, 14, 15, and then, the panic of that March selling. We actually got to 80, just showing extraordinary volatility in the market. We're now back down to in the 30s. How do you kind of view the volatility in the marketplace here?
Well, I don't watch the VIX that much, to be honest, because I think it's it is just a contrary indicator. But like you said, going from the teens to the 50s and 60s, and now in like basically at 39, 40, it doesn't give you complete confidence that the worst is past. You really need to see the VIX and volatility come back down to a more stable level to give people confidence to step in. You're not going to get the average investor to want to take this kind of risk.
Vince, one more question. What's sell in May and go away mean to you? That's been our theme today. What's sell in May and go away?
I got to say, it doesn't mean anything to me. A lot of people are talking about it. Everybody talks about it, but if you look back historically, it's not actually accurate. And to me, as a former trader, if everybody's selling, I'm probably buying.
Okay, Vince, you got to be on more often. CAD. I learned something today, Paul. CAD, Canadian. Vince Signorello with us, really quite good on the pulse of the market. Paul, this is important, and I've just seen this moments ago. This comes from John Murdoch, working off Johns Hopkins University work and also Center for Disease Prevention in Europe, and that is the long-term death rate within the pandemic of the United States of America and United Kingdom. So John features right now. And Paul, it's real abrupt, and we heard this from Joshua Sharfstein of JHU today. United Kingdom is rolling over. They are bending a very difficult curve in the United Kingdom. I'm going to be blunt. It ain't happening in the United States of America, Paul. It's not a bend over. It's flat.
Yeah, it's flatted. We're for every big area, like take the New York State, and we'll hear Governor Cuomo again later this morning. The data is pretty clear there that the New York State has kind of bent that curve, and everything's kind of trending in the right direction. Maybe not as quickly as we would all like on the downside, but certainly the trends are positive there. But there are other sectors of the U.S. Regionally that are seeing spikes and by no means a bending. So it's just a question, I think, of where you are in the curve. And that raises a question, Tom, that's really been a topic of discussion over the last 3, 4, 5 days, which has been this whole reopening. And when do you reopen? How much do you reopen? How quickly do you reopen? Lots of different theories there. And, of course, again, we'll hear from Andrew Cuomo again today. He's taken a quite cautious view of that, perhaps more so than some other governors or maybe even some other federal folks.
Absolutely. The other cautious view is the airlines. Of course, Mr. Buffett getting that going on Saturday, as our David Wilson said, and we'll have stock quotes. I know that Paul and Lisa will really focus on that with Mr. Wilson here in a bit. The airlines have Paul. It's grim. I mean, it really is, and it just I kind of went to my question to Bill Smead: are the airlines, air travel, is that going to be for years? Is it going to be altered? Is consumer behavior going to differ? Will you ever take the middle seat again? Or will you ever sit in a row where there is a middle seat taken? I don't want to play epidemiologist, but Paul, all of my childhood and history of this is simple. All of this is academic until there's a vaccine. Yes. When you get a vaccine, things get solved. That's what vaccines, that's why we had Louis Pasteur and, all that we studied in school as well. I had the clearest memories, folks, of the first of the polio drops, the pink drops they put in your mouth when you had your big, thick corduroys and your PF Flyer sneakers as well. We got Monday started. We'll be here all week. Jobs Day on Friday. Continue to stay with us. This is Bloomberg Radio.
Not completing high school is more of a social thing.
We're all having to get used to the new normal. And at Birkbeck University, we're experts at being adaptable. As London's evening university, we've been flexing around the lives of busy commuters for nearly 200 years. And you can find everything you need to secure your place for autumn online. From expert advice to virtual tours, a live chat with our students and course applications. Make the new normal, studying for the career that you really want. Search Birkbeck, and it's new problem solved.
Imagine winning 10 grand. Yes! With Set for Life, you could win 10 grand every month for 30 years. Get in! Amazing! Woo! Yes! Sweet! Unbelievable! Set for Life from the National Lottery. Your numbers make amazing happen. Play Monday online or on the app. Prize may be capped. Rules, procedures and game-specific rules apply. Players must be 16 or over.
This is an important message from the government. For now, we must all still stay at home. It can be hard, but it's making a difference. So please keep going for the ones you love. Keep going for every key worker on the front line as they keep going for us. Keep going because together we will beat the virus. To all of you making sacrifices every day, thank you. Stay home, protect the NHS, save lives.
Right now at the Halifax, wherever we're working from, we're all working together to be there for you.
So our customers can apply for a payment holiday on mortgages, loans or credit cards.
And because we want you to stay home and stay safe,
we've created step-by-step guides to help you set up online and mobile banking,
which is safer and easier than you may think.
But for those that really need to see us in person, we're keeping as many branches open as possible.
So however you need us at the Halifax,
we're here to help. Terms and conditions apply. For more information, go to halifax.co.uk.
Get your daily dose of NFL shop talk with these great podcasts on TuneIn. Start your morning off right with Around the NFL.
Injured, depleted roster into the playoffs, and I didn't think they belonged in the playoffs.
I think overall, though, it was a great divisional round weekend because you got the first one.
Run into the end zone with the Move the Sticks podcast.
We had a fun little Zoom cocktail hour last night.
Oh, yeah.
What a star-studded affair. Greg, you were there for the earlier part, but it really popped off
A little later on, we had Zach Goldman.
And dive deep into the sidelines with the Peter King Podcast.
On the occasion of his 50th birthday, come down and record a little bit of retrospective on the life and times of Brett Lorenzo Favre.
That sounds like a bestseller.
It sounds like a precursor to a funeral. That's what it is.
I wasn't thinking that.
Explore these and more hard-hitting NFL podcasts right here on TuneIn.
To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip number 5, cooking something. We all get stuck in a culinary rut with our normal routine. Shake things up in the kitchen by trying an ambitious new recipe or an over-the-top dessert. If cooking really isn't your thing, you can always support your local restaurants by ordering out. For more indoor inspiration, search Listen from Home on TuneIn.
Today at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Is there any bank right now in the U.S. that you think is a buy?
Do you think Chairman Powell has lost the market?
Jeff Bezos is no dope. What's the big ka-ching?
The big question, I think, for investors is free cash flow.
Breaking market news and insight from Bloomberg experts.
The U.S. tariffs actually hurt both China and the U.S.
Large strategics are looking to either buy or invest in innovation.
Soybeans and corn have been basically at or below the cost of production for about 4 or 5 years.
What we see more bonds, more yield.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good morning. Happy Monday. Coming up over the next hour, Warren Buffett set the tone for today, and it is somber, certainly for the airlines. We'll discuss that, as well as China's economy as it starts to reopen with the rest of the world still closed for business. First, let's get the numbers. Greg Jarrett has that for us with the Bloomberg Business Flash. Greg.
Lisa, stocks are following stocks in most of the rest of the world lower, signaling a risk-off move that hit markets at the start of this month may have further to run the dollar stronger. We take a look at the markets every 15 minutes throughout the trading day here on Bloomberg. S&P is now down 0.6%, down 18. The Dow is down 1.1%, down 256. And the NASDAQ is up close to 0.1%, up 5. The 10-year right now is down 8/32. The yield is 0.63%. West Texas Intermediate crude is up 0.3% at 19.84 a barrel. COMEX gold is up 0.75% at 17.14 even per ounce. The dollar yen 106.88. The euro's $1.0929, and the British pound $1.2432. J. Crew has filed for bankruptcy, unable to revive flagging sales of its preppy clothing line amid the pandemic and crushed by debt, which is rooted in a long-ago leveraged buyout. The retail chain reached a deal with the majority of its lenders to convert a $1.65 billion of debt into equity. That's a Bloomberg Business Flash. Bloomberg Markets is underway with Lisa Abramowitz and Paul Sweeney.
Greg Jarrett, thank you so much. We appreciate that on this Monday morning. A little bit of a risk-off feel today, perhaps in response to some cautious comments. A lot of Warren Buffett watchers would tell you a little bit more somber than they typically hear from Mr. Buffett. To get a sense where the action is in this Monday morning trading session, we turn to Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at?
Well, you got to start with the airlines. I mean, you talk about an area where Warren Buffett has had a change of heart. You know, years ago, he called himself an aeroholic, and it seems like that particular ailment kind of caught up to him in light of the coronavirus. I mean, you look at what's down today. American, Delta, Southwest, United, Berkshire Hathaway had stakes in all of them. They're now gone. There have been some indications that at least the stakes had been cut in Delta and United the other day.